Test 1, 2. Start with the Pledge of Allegiance. So please stand. Face the flag. Me, I'm doing it. Right hand over your heart. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you.
Sorry.
I'll go ahead and do the roll call. So this meeting is being held virtually in person, and we'll do a roll call of all trustees to confirm attendance. Ms. Martin?
Here.
Alma Martinez? Nicole Me?
Here.
Mr. Razzo?
Present.
Mr. Green?
Present.
Mr. Moore?
Here.
Okay. We received one request from Trustee Moore for just cause B. Trustee Moore, can you
Yes.
publicly disclose whether any other individuals 18 or older are present in the room with you?
There's no one present in the room with me.
Thank you. Ms. Ginsburg? Here. Okay. Staff participating in the meeting include Acting Chief Executive Officer Louis Lugo, Assistant Executive Officers JJ Popowich and Laura Guglielmo, Chief Audit Executive Richard Bendel, Chief Counsel Steve Rice, Senior Staff Counsel Allison Barrett, Staff Counsel Jessica Rivas, Human Resources Director Dr. Carly Natoya, Human Resources Analyst Armand Castillon. Internal audit staff include Richard Bendel, Leisha Collins, Christina Logan, Nathan Amick, Gabriel Tafoya, Christina Sun, Christian Velasco, Delfino Aguilar, Alex Ochoa, and all division managers. Consultants include Rema Parapili and Trip Hillman from Weaver, Kristen Hunt and Brandon Harry from Plamaran, Priya Kumar and Britta Boyle from Baker Tilly, Acre Committee Consultant Larry Jensen. Trustees, please use your raise your hand Zoom option to be placed in the queue. At this time, we ask all meeting participants to mute their mics until you're ready to speak. And now we may proceed with the agenda.
Thank you. Approval of the minutes. Do I have a motion to approve the minutes from August 21st?
So moved.
Second?
I'll second this.
Okay, thank you.
Okay, so the motion was made by Mr. Moore, second by Ms. Ginsburg.
No.
Mr. Green. Oh, Mr. Green, I'm sorry. Thank you.
Okay.
And second by Ms. Ginsburg. Ms. Mee?
Aye.
Mr. Razzo?
Aye.
Mr. Green?
Aye.
Mr. Moore?
Aye.
Ms. Ginsburg?
Yes.
And Chair Martin.
Aye.
Okay, the motion passes unanimously.
Right. Any public comment?
No public comment at this time.
Moving to non-consent items, provider premium calculations and payment audit. And we have a presentation for that. Am I looking at
Good
that right?
morning,
Okay.
Madam Chair, trustees of the committee. Delfino Aguilar and Gabriel Tafoya will be coming up to make that presentation.
Okay. Good morning, Madam Chair and trustees. It is a great pleasure to be speaking in front of you today. Seems like just yesterday that I was presenting myself as one of the new senior internal auditors, and today we are presenting my first audit for provider premium calculation and payments. The audit was performed by myself and my colleague Gabe Tafoya. We each focus on different facets of the audit. I focus on the retiree healthcare side, which is RHC. He focused on the Financial and Accounting Services Division, or the FACES division. In this presentation, we will cover the summary of the engagement, the objectives, the key findings, and the overall audit rating. Next slide, please. So as you can see, the responsible divisions here were retiree healthcare and the FAST division. The type of engagement was an assurance engagement. An assurance engagement is an objective assessment of the governance, risk management, and control processes. In this case, for the processes and controls of the premium payment calculations by IRC and FAST. The audit rating given was opportunities for improvement. As I go through the presentation, I'll provide additional detail and justification as to why that rating was given. Next slide, please. So the purpose and objective of this audit was to ensure that retiree healthcare premiums are calculated correctly, collected and paid timely to the plan sponsors, the members, and to the insurance carriers. Also included in this audit was to ensure that timely healthcare enrollment was done, and also that timely Medicare Part B reimbursement was made to eligible retirees in accordance to internal policies and procedures. Now, the scope or the timeframe of the audit was from April 1st, 2024 to May 31st, 2025. Now, the rest of the presentation mostly focuses on RHC. So now I will hand the floor over to my colleague, Gabe Tafoya, so he can go over his part of the audit.
Thank you, Dal.
Real quick, I have a quick question. The timing of it, was that you're trying to overlay like when we have a bulk of new retirees on April, in March? Was that the purpose of that, or did it just randomly land that way?
Yeah, so so we have enough sample size of new retirees and ensuring that that the new Medicare Part B reimbursement for 2024 and 2025 were being done. So we wanted to.
So you utilize the March Madness as a bulk source. Yeah, excellent. Thank you.
Good morning, Madam Chair and trustees. I address the audit objectives and the testing of controls that were performed by the FASD division, in which FASD facilitates the transfer of funds from the members and the plan sponsors to the insurance carriers for their monthly premium payments. For detailed information on the FASD objectives and controls, please reference pages 2 and 3 of the report. In summary, the control testing that I performed included validating FASD reconciliation worksheets, billing memos issued to the plan sponsor, billing amounts and approvals, timeliness of sponsor collections, wire transfers to insurance carriers, and the associated controls. FASD has strong controls in its operational areas that were reviewed with no issues identified during the review. And now I'd like to hand it back over to Dal for the remainder of the presentation.
All right, thank you, Gabe. Next slide, please. So as we go through the next 2 slides, which has to do with the findings, I will provide summaries of the observations that led to the findings and also to discuss management's plans of actions for remediation. There's a lot of detail on these things. So if you have any questions as I'm going through it, please feel free to stop me and to make clarification. So you may find additional detail on the findings on pages 6, 8, and 10 of the audit report for findings 1, 2, and 3 respectively. So we'll go ahead and start with finding number 1. Finding number 1 has to do with a backlog of Code 19 reports and low income subsidy reports, or what we call LIS reports. So a quick overview of what each of these reports mean. So Code 19 is money owed to the member. When funds cannot be remitted, for example, lack of beneficiary or death of the member, things of that nature, they are considered unclaimed, and then therefore they are classified as Code 19. That's based on the workspace system, and that's just how it's coded on there. And for the LIS, or the low income subsidy reports, these are subsidies that are offset premium payments for the members. So LACERA cannot offset the premiums prior to the retirement payments being disbursed. So until the report is received from the carriers, that's when RC can then issue refunds for premiums that are overpaid. Okay, so that's just a little background on what those reports are. So our observations during the audit, it was noted that there was a backlog for both of these reports, along with the lack of documentation of actions performed on the accounts. So the root cause affecting this, though, was the backlogs was the lack of resources due to a combination of retirement, promotions, and also the fact that that processing these remittances or these payments from these reports are extremely labor intensive. So in order to address this finding, management has they've started implementing cross-training for both of these reports and to ensure proper documentation of actions taken. So this will facilitate the work of clearing these backlogs. And so the reason for their high rating, since both of the reports are monies that are due to the members and beneficiaries that have not been remitted and without proper documentation of actions taken on those accounts, it exposes LACERA to reputational risk. And so LACERA has a fiduciary duty to these members. And so therefore it was given a rating of high. And management has a planned completion date of December 1st, 2025. Any questions on that one?
No.
Yes.
Questions. Lack of resources. So I know that you're gonna do the cross training, but is that your permanent solution? Or are you gonna hire more people in that area?
With the cross trading, it would be sufficient to work through these backlogs. RHC has already been working through the LIS reports, and they will be sending out the memo with all the refunds and clearings to FASD, so they can cut out the checks from all the backlogs. So that all will be clear by December 1st, 2025.
I understand that. I'm just curious about permanent resources in the area.
RHC believes that with the cross training is sufficient to
Okay,
accomplish this.
understood. Are they looking into any sort of automation? I mean,
Yeah, so that was discussed, but there's no definitive deadline on that. But Cassandra from RHC is here.
We are working with systems to automate much of this process here. It's currently in process, so.
any end date, or you're just beginning the,
We just started discussing the possibility of implementing and how we may be able to do it
Okay.
in order for us to not have such a manual process any further.
yeah, that's my concern, yeah. In a lot of operations, there's a lot of manual processes, and automation could help. Sometimes automation doesn't help, but it needs to be looked into, so
Yeah,
thank you.
We're looking at all avenues.
Okay. Go ahead.
Good morning, everyone. Thank you, Chair. I just have a comment on this. When I read the materials, I was a little bit feel daunting that we owe our member 1,400 members money for about $200 million. So we're not process that. The impact on member a great deal that people that need the money. So this is critical. And this is not consistent with what we want to do, superior member experience. This is not. So I think it's worth it for leadership to know that what is the priority, manager to know that how to prioritize our work. And obviously this is something that should be prioritized. I understand the resource problem. I think this is going to happen. We're always going to have people move around. We're going to always have people retire, but we need to learn from this, So how do we prepare for transition of people leaving, people, retiring? Have a plan for that. So such important work is not being impacted. So I think that's something to learn. In investment, I always say we either on or learn. So I think here we always have something to learn. So next time we don't run into this kind of issue again and then say the same reason, resource constraint. So resource management is our job as well, So just a note for that. This is important. This is critical. The impact on member should be, managed better. So learn something from it. And then the other thing that I think we can also learn from is that maybe there's many other pension funds out there, CalPERS, how many members they have, how many cases have, right? How do they manage? Maybe we can learn from them in terms of productivity and efficiency, how we can improve. Just that comment.
Can I make a comment on that? Yes. The amount that you're referring to has to do with the Code 19 reports. So those are accounts that RHC cannot find anyone, whether it's the member, the beneficiary, or dependents or spouse or any of that nature. And so they have very limited resources as to when it comes to skip tracing. So they don't have that type of those resources to kind of look for other addresses or things of that nature. So they're their responsibility is kind of like limited on that nature. So that's why there's so many of them that cannot be cleared.
Does that amount $200 million? It's
Thousand.
$200,000. You said
Yeah,
million, so I just want to be
I'm
sure.
so
That
sorry.
sounds so alarming.
I'm so sorry. I probably used the wrong one, but thank you for addressing it. I'm sure that some part of it's difficult, but portion it got pushed on it because of us. Let's say we delayed it.
Yes, of
So
course.
we at least take care of the part that we can take care.
Mhm, of course, yes.
Thank you.
Go ahead,
Just
Cassandra.
a little
Yeah.
further clarification. These are unclaimed funds that we don't have a means, or there's no estate on file for us to submit the payment to those individuals' families.
Got it. We'll continue to make effort there, but the ones that we can take care,
We
let's not
do
delay it.
those ahead of time. Any that we can collect from, RHC does make that adjustment and payment out to those people. These are all funds that we don't have anybody on file to submit the funds to.
Not the whole of it, but just a part of it.
Right,
the dollar
because some of
amount,
it goes to the
so-
county, correct?
Right, we
Mhm.
can do something, some portion of it, right? Other part of it is more difficult. We
Correct.
need more resources to continue, figure out who they are, those part. I understand that part, but the part that we do, we have to
Yeah.
take care of it. But thank you for clarifying. It's not 200 million. So our members listening out
I
there.
have one question and then I'll turn it over to Trustee Green. That is a small population. Have you reached out? Do you have consultants or contractors? There's people out there that go and look for funds. Do you do anything like that? I'm just wondering.
There are other units that do skip tracing and things of that nature.
So we do
Yeah.
have
Right.
processes for trying to locate people
Good, okay.
using different services that we have.
It just depends whether we have enough information to find them.
Yeah.
Whether we can actually identify the right people as well. So there
Okay.
is a process for that.
Perfect. Thank you.
Mhm.
Okay, Trustee Green?
Thank you, Madam Chair. The 1,406 outstanding, like what's the most senior one? Like how far back does it go?
Yeah, so they were a couple of accounts, like literally a couple, from 2016 and 2017. But most of the amount most of those accounts go from January 2018 to June 2025.
Okay, and then, so, I comparatively, try and look at, it's a great catch, right? Like you said, it's our fiduciary responsibility to try and make these payments land where they're supposed to go. So it's really good. And that's, I'd like to say out loud that, that's why we have this audit, is to catch these things, identify a problem, and then solve that problem to the best of our ability. Ratio wise though, again, this is not something that is a unforced error from LACERA. These are, my understanding is, like I said, these are individuals that nobody knows where they're at, right? So these are, or payments that have moved or anything like that. So, and I'm sure some of these will never be, figured out. So, but yeah, I think it's a good plan. I think, like JJ said, they have options to do that. But if you guys recall, remember we had that one case where we talked about in the last audit, I think, where there was people had not different birth dates. Remember that one? Yeah. So but ratio wise, do you have that data, the 1,400 compared to all the RHC benefits that are going out? What does this look like as far as a percentage?
I don't have that
Processing.
percentage. However, I do want to clarify that these accounts that I aggregated are accounts that didn't have any sort of documentation as to what was done to try to reach the member. So lack of documentation or any paper trail,
Gotcha.
if it were to be disclosed in a financial audit, external financial audit, which becomes public, causes a reputational risk to LACERA. And without us being able to prove that we try to do anything to get this money, is the reputational risk that is in line here.
Understand. So yeah, so it's kind of a catch-22.
Yeah.
Yeah, other than hiring a private investigator, outreach, the information's available, but that horse to water, getting this information to membership to make sure they have this stuff done, they have a durable power of attorney, all that good stuff ahead of time. It's hard. I mean, our membership, we have people that ask questions. I'm like, go to the website. It's all there, that kind of stuff. So however we can increase that exposure to get this information out, that I think is the preventative, the prophylactic for this, is having it done ahead of time before they retire.
Yeah, understood. Thank you for that.
Well, you're working on a follow-up audit, which is the unclaimed, not follow-up to this, but necessarily, but an unclaimed
Yes, I'm working
audit
on unclaimed
for the
accounts. Yeah.
organization generally. So I don't know if that'll incorporate some of this, but it's certainly going to look at that risk area in the organization of unclaimed accounts and how we handle that as an audit that I believe we've already begun.
It's in the pre-planning stage.
Pre-planning stage of the audit. So one of the next assignments that Del will be working on.
Back over to you.
Okay, back to me. I thought there was more questions. Okay, perfect. All right, next slide, please. So here we will discuss findings 2 and 3. So finding number 2 has to do with delays in carrier discrepancy reports. So this resulted from a delayed January 2025 Kaiser discrepancy report that was not received by RHC until May 2025. Now, what is a discrepancy report? So premium payments are paid a month in advance. So therefore, any changes on the carrier's end, RHC will not become aware of them until the following month when the report is received. So hence the discrepancy report name. And so these reports summarize any changes such as dependents, changes in plans, death notices that RHC wasn't notified of, things of that nature. And because of this month delay, a prior period adjustment is needed. And so you can see how these prior period adjustments as a reconciliation between the carrier, RHC, or LACERA, and the member's account. So that's what that is. And sometimes these result in refunds, or sometimes they result in what we call retrievals, or trying to get the money back for anything that was overpaid to the member. I do want to note, however, that this was a result of a Kaiser system error, not RHC. So you may ask, why is this a finding for RHC? Well, specific carrier reports, especially Kaiser, who is our main carrier for our members, these reports are routine and cyclical. Therefore, RHC should have an expected timeframe of when these reports should be received. And so RHC is responsible for ensuring that these timely reports are being followed up on and to minimize member impact in that sense. So initiating communication with the carrier can help mitigate the delays of these future reports. So therefore, because of that, it was given a rating of medium. And management has agreed to the following and has started open communication with the account manager that represents LACERA, and will continue to do so to mitigate the risk of late reports. And the planned completion date for this is July 2026.
Perfect.
Any questions on that one? No? Perfect.
Good.
All right, finding number 3 in the last one. This has to do with inadequate oversight of prior period adjustments. So during the audit, I noted an account that should have had a prior period adjustment done in May of 2025, but it wasn't done until it was discovered during my audit on October 18th, 2025. So this resulted in a Medicare Part B reimbursement retrieval from the member's spouse of $1,222. Now, these large retrievals can be financially impactful to members, especially when they're on fixed income. So therefore, the finding was given a medium. RHC has remediated the finding, and it has been validated and approved by internal audit as of November 4th. Any questions on that one? Okay. Next slide, please. So internal audit gives 3 different ratings, from highest to lowest, that is satisfactory, opportunities for improvement, and unsatisfactory. Now, for the most part, RHC demonstrates a strong control environment to accomplish most of their divisional objectives. However, because of the 3 findings, high and medium rated, a rating of opportunities for improvement was warranted. I do, however, want to emphasize that RHC's proactiveness in initiating remediation action prior to the issuance of the report exemplifies their dedication in improving their governance, risk management, and control processes and their duty to the members. And kudos for them for resolving finding number 3 within a week of the report issuance. Next slide, please. Now, I want to thank RHC
And FASD.
for all their help and cooperation through this audit. As my first audit with LACERA, I was truly lucky to have an amazing co-auditor and lucky to have been able to work with such a strong, helpful, and dedicated team. Thank you. And now, if there are any additional comments or questions, I'm happy to take them. No? Okay, well, great. Yeah, thank you so much. We appreciate it.
Yeah, I'll second it.
Okay. And Ms. Ginsburg made the motion. Mr. Green seconded to accept and file. So I'll do roll call. Ms. Mee,
Aye.
Mr. Rozzo,
Aye.
Mr. Green,
Aye.
Mr. Moore,
Aye.
Ms. Ginsburg,
Yes.
Chair Martin.
Yes.
This motion passes unanimously.
Thank you. So next up is CEO corporate credit cards.
And Alex Ochoa will be presenting on this one.
Thank you.
Hi, good morning, Chair Martin and trustees. My name is Alex Ochoa. This is my first time presenting here at Acres. I'm the newest member of internal audit, so thank you so much for this opportunity. I am here to do a brief overview of the Chief Executive Officer's credit card expenditures. Next slide, please. I worked with our executive office as well as our FASD division to complete this insurance audit. Our audit rating given for this audit is satisfactory, which is our highest rating that we have. Satisfactory, as Delfino mentioned, is the highest rating that we provide. It means that all the controls and key risks, all the controls to address key risks and that business practices comply with company policies. Next slide, please. Now, LACERA maintains a corporate credit card program to facilitate the purchase of items described and permitted within its corporate credit card policy. All credit card expenditures are approved by a manager, with the exception of the CEO, since they are the highest ranking executive. Since 2021, internal audit has completed a compliance audit to ensure that the CEO's credit card expenditures comply with LACERA's corporate credit card policy. This year, our scope was from July 1st, 2024 through June 30th, 2025, and it included all transactions made throughout that period. Since Mr. Luis Lugo was the acting CEO as of March of 2025, his transactions were also included from March 1st to June 30th of 2025. Next slide, please. Overall, there were 42 credit card transactions that totaled $27,395. I'm happy to report that all were compliant with the policy. As shown in the chart here, we had the largest expenditure being the management offsite, as well as the various memberships that LACERA is, professional memberships that LACERA pays on an annual basis. The third one was the business meals, which only included 9% of the overall credit card expenditures. As you can see here, there was no areas identified for improvement. Next slide, please. As I mentioned, this is my first audit, so I want to thank the team, including the FASD, as well as the executive office, for the cooperation, their guidance throughout this audit, internal audit, especially Mr. Gabe Tafoya that was up here earlier. He was a great help during this audit for me as well. And with that, I'll stand for any questions.
I just want to, I have a comment. Congratulations on your first audit and congratulations on a clean bill of health on the credit cards. That's excellent.
Absolutely.
Yeah, you ripped it. So the expectation is set and you're going to have to come with the same performance every time now. So This is a harsh, this
I
is
could do that.
rough, this is a rough crowd. Good job.
All right. Mm.
Thank you, Chair. Thank you for presentation. Enjoy. One slide back, it just help me understand what management offsite is.
Sure. So the management offsite was a meeting of all of the LACERA managers, CEO hosted to, I don't have the agenda with me, but it was an offsite location. The card was used to secure the vendor, the place. I'm trying to think of the name of it, as well as the meals that were provided there. However, the budget for management offsite is in the HR budget. So when it was time to pay the bill, it came out of the HR budget. But if Mr. Lugo would like to explain more what the management offsite is, I'm sure you can.
Yeah, Chair Martin and Trustee Mee, the management offsite is really an annual planning meeting that we have with all leadership at LACERA. And we conduct it offsite annually this year. It'll be December 16th. And last year we held it at the Huntington, and this year we'll hold it at the Huntington as well. And again, just sets our agenda for the year, for the upcoming year as it relates to strategic priorities and just overall focus.
So my understanding is that because we have offsite for BOI, offsite for BOR, right? So this offsite is not that two offsite.
This is an internal, correct. This is an internal management offsite.
So this is offsite for internal leadership management for one event each year.
Correct.
Interesting.
Yep.
It's one event for not a lot of people. It's some cost there.
Yeah, it's about 70
people
total. Yep.
Okay, got it. Thank you.
Like you're done.
I'm done. Thank you so much.
Okay, do I have a motion to accept and file?
So moved.
I second it.
Motion was made by Mr. Green, second by Ms. Mee to accept and file. I'll do roll call. Ms. Mee?
Yes.
Mr. Razzo?
Aye.
Mr. Green?
Aye.
Mr. Moore?
Aye.
Ms. Ginsburg?
Yes.
And Chair Martin.
Aye.
The motion passes unanimously.
Okay, batter up is fiscal year 25-26 audit plan.
Well, tough to follow up on those two first-time reporters to the ACA committee. I guess I'll just say this. My name is Richard Bendel. This is my last time reporting to the ACA committee.
No way. No.
And hopefully I do half as good a job as those two gentlemen just did. I'm requesting that the committee approve the amendments made to the fiscal year 2025-26 audit plan. Attachment A in your is the audit plan approved by your committee at the June meeting. Attachment B is the red line version with the deletions to the plan in red and additions in blue. And attachment C is the clean amended version I am requesting that you approve today. While these plans are approved at the beginning of the year, we always let you know that these are at a point in time and risks vary throughout the year. Incidents occur, things come up that require us to modify the plan. While this plan goes from 42 to 41 total assignments, 2 of the projects being requested for removal are not actually being removed, but consolidated into the new audit titled Centralized Vendor Management, the advisory project. The 2 removed are the vendor procurement contract establishment and the ECLM centralized contract management. So it's truly a renaming and consolidation of those 2 audits. 2 other additions were the CEO credit card audit, which Alex just did a great job. And that was planned on being a CAP program, the continuous audit program test this year, as it's a pretty standard audit, and we didn't think it was necessary to keep bringing it back to you as a full audit, but we thought it was a great learning opportunity for Alex to work with and take the audit from start to finish, and he did a terrific job with that. So it was a great educational opportunity, and he
Richard,
knocked it out the park.
I'm sorry, can you interrupt a minute? I'm sorry. Can we put up the page that he's talking about? I don't know which one it is. It looks like it's page 53. And if you look at the whole slide deck, right? Is that right? It's just hard to follow. If we could look at the chart, I think it would be easy for us to follow.
Okay. Are we able to put that up?
That's
I
what's on the
apologize.
report looks good.
You can keep going then, Richard, until and then we can ask
Okay.
questions once it's up.
Well,
Yeah.
it may, let's give it a minute to see
Okay.
if it.
All right, thank you.
What's that?
Attachment B.
Attachment B is the red line version. Yes.
So you're explaining to us what's in the blue and the red.
The blue and the red, yes.
Yeah.
I'm talking about the additions at the moment. So two additional additions were the CEO credit card audit and the HR special assessment request. I skipped over the two in the middle of the 5 that were added, and those were the systems development and change control audit and the disaster recovery advisory project. These were 2 of the audit recommendations made by Weaver in their delivery to us of a 3-year IT audit work plan, which was part of their charge in the IT risk assessment. Weaver will be presenting to the committee in closed session later today on their report. But so those are the additions. The deletions, and these are not necessarily deleted. It's not that these are not still considered risk areas that we need to consider in future audit plans. But right now they're just being removed for capacity purposes, not only of the internal audit team, but for example, removing the mobile device management member data protection audit. We're prioritizing the systems development and change control audit and the disaster recovery advisory review over that one for the time being. So that'll be put back in the hopper for consideration of addition to the audit plan in next year. The investment office risk assessment, we think that with the addition of CLA coming on to start work as our external auditor, that we're going to be able to learn from them. That's an opportunity for us to better understand the risk area in investments and identify areas that we can perform work. And so that is, for the time being, we think we'll get some coverage from the addition of CLA, but it will be considered in the future. The GRC benefit protection unit, again, an area that we definitely want to get into. We may get into that as part of our enterprise risk management project. So that risk area is still going to be considered, but not necessarily as a standalone audit. So at this time, I ask again that you approve the amendments to the audit plan, and I'm happy to address any questions you may have.
Trustee Me.
Thank you, Claire. Thank you for the presentation. First of all, congratulations to your retirement. You own it. You work very hard on it. It's sad for me to see you leave because every time I look at you, I feel like you're representing this organization's integrity and someone that I can trust. So sad to see you leave, but congratulations. I do have a question on the item that being removed, item 17. If you can expand on that, what's the plan for that? The reason I'm asking is because that, in my mind, is a critical item, vendor procurement contract attachment, because recently we have a recent case, right, that we talk about it become a criminal case. So
yeah, so that again is not necessarily being removed, but will be considered in that addition of the looking at the centralized vendor management audit. So we consolidated that into the single audit. We'll address that in there, and if we need to go deeper, we'll do another. We'll go further into that in a separate project.
Got it.
But it's
Thank
not.
you.
It's still going to be included. Yeah.
I'm glad. Yeah. Thank you.
Mr. Bentley, and I might be missing it, but one of the things we had put as a part of the plan was the offboarding security and for when someone leaves LACERA service, including the credit card return and all that stuff. Did that get completed? Am I missing that? That was one of the things that was identified. I think in the last meeting or 2 meetings ago, we talked about which was going to be a fairly quick fix, and I didn't know if it just fell off because of that.
Carly has more information.
That was one of the things. Am I having committee processing faux pas here, like it's all coming together? Or?
Yep. Okay. I'll let Ms. Toya.
Hi, good morning. Yes, so we are continuing with the termination of access audit. So I'm not exactly sure what it's called on the attachment B, but it is continuing. So last year there was a finding. We've been working since maybe last November for phase one, November to December, to complete the items that were high risk but easy to implement. We've continued from January through present with a deliverable or an end date of December 31st this year on the remaining of the items to complete for termination of access.
I found it. Yeah, it's under administration. It's number 20.
Number 20.
Offboarding exit interviews.
No, that's not that one.
Offboarding exit interviews review?
Yeah, so sometimes it's coupled with one of the systems audits because it comes up as a part of SOC where we terminate access. And I left at my seat, but so work has been continuing on that. The go live date is I think 12/10, 12/15-ish for completion 12/31. So we have continued working on that.
So
But in
12/31 of this year, yeah?
Yes. In speaking with Mr. Tafoya, we communicate often about the issue. Once it is implemented, he'll have to do testing on it again to make sure that the implementation has actually been done correctly and that we're abiding by it.
Okay.
So it's probably on there. We're definitely
It's
working
not
on
going to
it.
be. It's not going to be on this plan. It's part of our recommendation follow-up process.
Oh, yes,
So
very
that's
good.
there's a report for information in there that it'll be included in that.
Okay.
So we follow up on it, and we also include these for the future. After we'll test to make sure that it's actually been implemented and
Yeah.
validated. It's one of the requirements of our recommendation follow-up process. We'll also add it to our continuous audit process testing for future testing. And
Excellent.
going
Thanks
forward.
for clarifying that. Sorry, I
No.
was
Sure.
a little punchy today, so I was trying to look for. Thanks for the work on it too.
Any other questions? Oh, sorry, Larry.
Yeah, thank you, Richard. This is really good. It's important to be flexible and to be able to adjust your plan according to, risks that are happening and because things change so quickly. So appreciate the flexibility. Just a couple of questions though. And I'm sorry if I didn't hear this correctly, but the CEO credit card audit. So you included it in this year's plan. Next year, will it go back to the CAP process or will that remain?
It'll for the first time be done through the CAP process where we do the testing. We'll go through the full process of testing the transactions to make sure that they're all valid expenses, business expenses. And it wouldn't come to the committee as a report unless we found that the CEO was now, going on vacations and shopping and buying, if something crazy like that happened, that's typical of any CAP. If everything comes out good, it just becomes part of the report to the committee on a summary of CAP testing that we tested that and everything was good. If there was significant concerns or violations, we would elevate that as an individual item to the committee.
Okay, good. Thank you. I just want to make sure the committee knows what to expect for next year. Then also, as part of onboarding with CLA, we had a readiness assessment review that was going to be conducted. Is that included in here, or I don't see it specifically, or do you just consider that part of the oversight of the financial statement audit, or and will the committee receive a separate report on that?
Christina, could you talk to that one? I believe it's just part of the overall, right? We don't have it on here as a separate item.
I see number 25, which is oversight of the financial audit. So I didn't know if it was just
I don't think
included
we
in
called
there.
it out as a separate item.
Yeah, we didn't call it out as a separate item. Part of it will be addressed through item number 26, which is the investment custodial bank reco, but it's really part of the transition to our new audit firm. And yes,
You'll just
you
keep
will
us
receive-
appraised if there's any issues that come up during that assessment then?
So the committee will receive a high-level report on the readiness assessment, the details of like what needs to be improved. At a high level, they'll come to the committee, but as they find the gaps, we'll be addressing them at that moment.
Okay, I just didn't want us to lose track of that as part of this report. Thank you.
Further questions? Should we do a motion? Do I have a motion to accept?
Second it.
We need a motion.
I'll make the
Oh, okay.
I'll move it.
Thank you.
Ms. Ginsburg made the motion, Ms. Me second. Ms. Me,
Yes.
Mr. Razzo,
Aye.
Mr. Green,
Aye.
Mr. Moore,
Aye.
Ms. Ginsburg,
Yes.
Chair Martin.
Yes.
This motion was passed unanimously.
Thank you, Richard. So we're going to move on to Plant Moran, financial audit reports. Good morning, everybody.
Button, so that Good morning, Chair Martin and trustees. It's a pleasure to be here this morning. I like to think that every day upright and breathing is a gift. And so are our financial auditors. So we're here today, as we always are in our winter meeting, to bring you the results of our annual financial audit. This process started in June of 2025 with Plan Moran coming to your committee, giving you the preliminary communications as they're required to do. After that, we started our planning phase, and that's really LACERA as well as Plan Moran kind of just lining up our lists of to-dos and setting out our regular communications. The heavy lifting takes part in August through mid-October. And as of October 15th, we did issue our final report, and Plan Moran will be here to speak on it. We did get a clean audit opinion, which is always, again, a wonderful thing to have. And now, before I turn everything over to Plan Moran, I would like to thank them. This audit concludes a 9-year relationship with them as our financial auditors. And through the years, they've been dedicated and committed to us and helping us grow and learn. And they've been just a great partner to work with. So if I may be so bold on behalf of the organization, thank you. It was a pleasure working with you as well as getting to know them as individuals. So at this time, I would like to give the floor to partner Kristen Hunt and manager Brandon Henry.
Thank you. We appreciate those nice comments. We've certainly appreciated your business. We've enjoyed working with the organization. We've received good cooperation throughout the process to be able to complete our audits and to be able to be here, to be able to meet deadlines and be here to present the results of the audit today. Do I have access to move this?
No, you just say next slide. if
Okay,
you don't
let's
mind.
go.
Thank you.
Next slide. So I'm Kristen. I'm the audit partner that's responsible for the engagement. As Nathan mentioned, we are completing our final year of the audit. We've been your auditors for 9 years, but we've had rotation periodically throughout that process until I've been in charge of the audit for the past 2 years. We also brought a new manager on board this year. So Brandon Henry that worked with me on the engagement, as well as some others who've been throughout the working with you throughout portions of the engagement. So next slide, please. I'll just spend a few moments telling you about the different items that we'll cover with you today, and then I'm going to turn it over to Brandon to go over some of the details. We'll talk about the audit timeline and the deliverables that we provide. And then Brandon is going to spend some more time talking to you about our areas of focus, the results of our audits, and then we'll leave some time if you have any questions. Next slide, please. I'll provide a little bit more detail. Nathan outlined that nicely what our audit timeline was, but this slide really gives you a perspective of how long the engagement takes. So it's really a process that we are not in here just at the end of the year, ready to do the engagement. There's a very thorough planning process that incurs in months earlier, and the entire process takes about 6 months to get through everything with an organization this size. We like to stay in contact with management and the FASD team throughout the year when any current events come into play. And that's one of the things that's really helped the audit go smoothly throughout the year is really to avoid surprises. And so we like to stay in touch with them when there are new auditing or accounting standards that come into play. But it's also been very helpful for us when we're in tune with any major current significant events. Things have happened throughout the year so that they aren't surprises, and it gives us time to settle on how those should be accounted for and treated so that at the end of the year, everything is as expected. So we really start that initiation process there back in the spring. And then in May and June, we start doing some of our interim procedures, and those really relate to understanding the control structure. And so part of financial statement audits do not include an opinion on internal control, but auditors are required to understand the internal control structure, as you can imagine, so that if we identify any missing key controls, that we are able to adapt to that and should excel or do additional focus testing in those areas, really, so we get enough comfort that those balances are indeed correct. And so that's an important part of us doing those early on so that when it comes to the year end, we're able to have appropriate procedures designed. We do on-site visits to be able to have discussions with individuals in person. We had discussions with many of you throughout the years, really related to our required communications to identify areas that you may see of risk and do the required fraud inquiries as well. We do a lot of work there towards July and August, but the bulk of the test work that we're doing really relates to that August, maybe September and October timeframe. And then the reports are actually dated about a month before then your opinion letter is here in mid-October. I want to spend a moment talking about the 3 deliverables because everybody understands that we give you a financial statement audit opinion, and that's the main bulk of the work, which is the big significant document that you've seen. That's your audit opinion, but we also do these 2 other GASB schedules. And so those are ones that it's important to make sure you understand what those are used for. Those are the GASB 68 schedules and the GASB 75 schedule. And so those 2 reports, the 68 relates to pension and the GASB 75 relates to retiree healthcare. And what that information is necessary for is because LACERA is made up of largely the county, but there are other employers that are involved in that. That gives the breakout of information primarily so that the county, LACERA and the other 4 districts know what portion of the pension liability or the healthcare liability that they need to record on their actual financial statements. And so that terminology 68 and 75 really, but what they relate to is the pension and the OPEB benefits. So those are important to understand. So with that, I'll turn it over to Brandon to go over the next couple of slides related to more detail on our work.
All right, thank you. So as Krista mentioned,
next slide. Maybe.
Oh, yep, next slide. Sorry, yep, next slide. All right, so yeah, so as Krista mentioned, my name is Brandon Henry, and I was the manager on the engagement. I just want to start off by saying I appreciate the opportunity being here to present these the financial statement audit and kind of how things went. So diving in, we have our audit areas of focus here with the ultimate goal of expressing an opinion on the financial statements. And so what we're seeing on this slide is kind of more of the key significant testing areas that we really dove into this year. And as Krista mentioned, this is a process. And so we applied, the process from the beginning of planning through detailed testing, through having the appropriate communications through each of these areas. And so just to kind of keep it high level and hit on some of these, obviously investment valuations is a very key area where we looked at different, analysis of trends along with substantive testings. So this is going to be in a planning phase of discussing with management, understanding the environment, understanding any new considerations that we should keep in mind this year. And then it's going to, quickly move into looking at the data, see, what types of investments had, significant swings, new investments that would be worth, looking into, as well as investments that do maintain more material balances. To really hone in on, doing different analytics, but then also performing the substantive testing over those different investment options. Kind of moving on to the census data testing. So again, we use, because of the mass data, we have different technology resources to help hone in and test the appropriate areas. So we're going to be looking at, all the different census inputs being age, date of birth, pay rates, years of service, and then using this technology to kind of hone in on changes that merit just looking into, and so that's going to be the census data testing. Next is looking into the actuarial assumptions and calculations. So that's going to be reviewing the valuation reports and performing testing over the reliability of the reports and the specialists used there, as well as looking at the key inputs that I think a future slide will talk a little bit more on that, but looking at the key inputs and making sure that they do appear reasonable. Another big area that we kind of focused our testing on was benefit payment calculations and related payments, including the disability payments. So again, this is going to be looking at new annuitants, making sure that detailed inputs are being performed properly, as well as using resources to compare current year to prior year, whether that be the number of benefit payments, the amounts that are being paid through these benefit payments, and performing a substantive testing and more detailed testing over a population of those changes. The next one is financial reporting, and which I think we hit on a little bit more in the future slides, but obviously reviewing all the reporting measures there. And then really just to kind of go a little high level over all these areas, it is the start to finish process of beginning with that planning, which heavily involves control testing, as controls are very important to rely on, to then move into discussions with the appropriate members, both internally on our end and externally on management's end, to then perform the different audit testing procedures that we do. So that is some of the more significant areas that we spent our time auditing this year. I think if we can go to the next slide, please. So this is the result of the audit. So what we're looking at here is our opinion, which I can let everyone read that, but this is an unmodified opinion. So this means that the statements were deemed free from material misstatement, which is the highest level of opinion that we offer. And in the opinion report, we do have an emphasis of matter for the valuation of the harder to value investments. Again, this is obviously the nature of the investments, having not, clear public information, but rather using alternative sources, whether it be, 1231 financial statements, interim reports, or independent appraisals to determine the fair value of these types of investments. I think we can go to the next slide, please. So then, the last slide here is our end of audit letter, which is our required communications to those charged with governance. So one section that we include is those significant estimates that were used in the audit. So as we just discussed, the harder to value investments, which again, kind of taking it a step further, as I mentioned, not only is it using these alternative methods such as statements or capital statements or audited financial statements, but also that reliance on the control testing and the due diligence that is being involved when these different investment options are being looked into. The next other significant estimate was the actuarial assumptions, being the long-term expected rate of return and discount rate, as well as the mortality assumptions. So again, we spend time doing our own testing to validate the reasonableness of those different inputs used by the actuary, as well as being able to deem the actuarial reports reliable. Next bullet point here is just it was a very smooth process overall. We had no difficulties or disagreements with management. Management was excellent to work with from start to finish through the audit. And as Nate mentioned, we were able to issue on 10/15, which was our day one deadline. And we really had no issues with that. We could issue sooner, but so it was, I say that because it was very smooth. It was great working with management. We had no corrected or uncorrected misstatements throughout. And in the end of the letter, it calls out how we do also review the ACFR in entirety, specifically being the investment, actuarial, and statistical sections, as well as the PAFR, with the thought that we do not express an opinion on those other areas, but we do review those areas to make sure that things are appearing materially accurate. And the financial statement themselves is where we issue our opinion. So that's kind of everything that I think I had, but I do want to wrap up by just giving thanks to everyone on management's team, Ted and his team, the internal audit team, the FASD team, and everyone we were able to work with from start to finish. It's been a great relationship, and when we look back on that timeline slide that Kristen was going over, it's a long audit, and it takes up a lot of the year, and we understand that everyone has their daily activities on top of handling all of our requests and such. And so we just really want to extend our thanks to everyone in management that we were able to work with, from both just a professional and keeping things moving very well, as well as just being personable and good to work with. So with that, I think if we go to the next slide, we are good to answer any questions.
Not sure whose hand went up first, but I'll start with trustee Me.
Thank you. Thank you for the presentation. I'm glad it went smoothly. This is important. I remember reading it from page 85 of the whole package about the net position change. So this is on the management discussion analysis. It's on the memo, I believe it's on the slides. 8.8. Page 85 of the package, which is on the memo, where it discussed, the financial, the position change, the fiduciary net position change. So if you cannot find it, I will just read it out here. It said the total addition to the fiduciary net position was 11.9 billion. The next bullet point said that the deduction to fiduciary net position was 4.9 billion. And then I do see the total increase was 7 billion. So I want to understand that number, the 11.9. Let's start from there. So total addition $11.9 billion. Do you have a breakdown of how much come from our investment earning and how much from employer and employee contribution?
Give us a second to just find it within the document.
Take your time.
It's fairly large. So you said it was page 85 of the
Of the package, yeah.
NVMA?
Or page 15 of your.
Okay, thank you.
The financial statements are prepared by management, so that's probably a better question to bring
CFO.
to. It's here. Right. The management, this is the management discussion analysis. And so that's prepared by management. So it's probably a better question to frame towards Ted and his team.
Good morning. Good morning, Chair Martin and Audit Committee, our ACRE Committee members. My name is Ted Granger. I'm the Chief Financial Officer. Trustee Nee, to your point, I don't have a specific breakdown of all the elements that went into that. Rough estimates are that we get about $4 billion in contributions. We also have about $8 billion in investment earnings. And so if we go to the income statement, we can see a little bit of the breakdown of some of the numbers. But again, these are just basically very high level numbers presented here.
Can I it's in the opening letter. It does identify a $29 billion increase, and it talks about the source, which is oh gosh, now I'm all over the place. But yeah, it talks about it identifies what it's most significant estimates related to LACERA's financial statements surround alternative investments, and the assumptions within the pension valuation is more fully explained below. Alternative investments were noted valued at $29.1 billion, 32% of net position, which was significant into the increase in that 8.8% since last year. Am I saying that right?
So that's the overall position change.
That's just
right?
one area though.
Right. I know the net, at the end of the day, we increased by 8.8%, which is excellent, increased by 7 billion, right? The money that we have income and then the money we pay out after that, we have 7 billion. I think, Ted, thank you. I think you kind of answered my question already. 11.9 billion addition to the fund, rounded up 12 billion. It does add up to 4 billion from contribution and 8 billion from earning. So I think that answered my question. Yeah.
Okay, great.
Thank you.
Thank you.
Okay, trustee Durazo.
Okay, so you mentioned the census data testing that you mentioned the birth date and to calculate the accuracy of the calculations. We received a letter recently, a handwritten letter. I don't know if everyone read that in the attachment to us, and it said it was a handwritten letter by a member, and there was an inaccuracy in the birth date, and they were getting paid a certain amount. And so it was reduced once the birth date was corrected, and now they're obligated to pay the difference. Is that how we came? That's how we come to find out about these things with your audits, or is there a list of different? I just want to get more information on that. How are we informed about these, instances?
Richard,
All right. Oh, you got the answer? Okay, go ahead.
Well, generally speaking, from Plant Moran's perspective, our data is static from one year to the next. So when they're looking at the birth dates, they're assuming if they looked at it in 2024, and then for me, it says 1976, right? In the next year, if it said anything but 1976, they're going to have a question about that. So if we get information from our members and we identify a change, and that change is made in the following year, they are going to, if they do 100% testing, I'm not exactly sure what your spectrum is with regards. So let's say if they did do 100% testing, they're going to notice, wow, Nate's birth date changed from the last time we looked at it until now. What was that situation? And that has come up in the past when we're looking at these. They will come and look to justify some of the differences that they find from our pension information from one year to the next year. Also, for example, years of service. Most people will go up 1 year per year of service. There are instances where they're like, why did it go up 5 years? Well, that's because they completed a contract where they purchased time. So once our data changes in our system, then they'll be able to identify it. But that letter from the member, they're not getting that information. That doesn't go into their analysis of it.
So Plant Moran is really looking at the demographic data holistically to make sure that it makes sense at a entire holistic level. I don't think it's likely that error was caught through there. I mean, it could be, but I think it might have been caught elsewise through the organization that we identify these things through some of our processes internally. Unless you're aware that particular one was caught that way. And they're looking more at the holistic data to make sure that it makes sense and it's accurate, that there's a 1 year increase in service credit, for example, as Nate said.
We performed 2 types of tests, really like significant tests related to the census data. And so the modern techniques will allow us to be able to get a full download of what the census data was last year, right? That would show each member, it would show those census triggers, like what are their years of service, what are their birthdays, what are their genders, and then we'll get the same, that's the data that's provided to the actuary. We'll get that same data for the current year that we're auditing, and then you can do matches, right? And then it will pop out what they had discussed.
So every year, the member is submitting something with a date, and if that, or, I mean, because that's unusual, correct? I mean, once you're already in the system,
right?
You're
So
not
we were
changing it
looking for,
every
like,
year.
'cause we would not expect things to change if it's
Right.
already in the system, other than an extra year of service, right? Or an
Right.
extra year of.
But the birth date specifically would not be changing
So
because.
those are the things that would pop out as an anomaly for us. And so I like to say, older audit techniques, I've done this for 30 years, where you would maybe be looking at needles and haystacks. These types of things now allow us to just shake loose the needles, right? And so that would be a needle where we would say, oh, well, why would this Jane Doe's birth date? That's not something we expect to change. And then that would flag us to ask the question. And that would be that. Sometimes that happens because there was it sounds like in this circumstance, there was a correction that needed to be made.
Right.
So we do that for the consistent data that we wouldn't expect to change.
Right.
But then on a test basis for new individuals, right, that get into the system, those are areas where we want to make sure the data that the member provided to show what their birth dates were. Years of
So it'd be
service and those.
unlikely then for a birth date to trigger any change because that stays constant. Once they submit the information, that just continues. So in your data, that's not something that would be likely.
It's not something we expect to change them. Likely the chances that we could that we could find errors like that, though, is when we do the new testing. So when we're testing a sample of individuals that are newly entered into the system, we will randomly select individuals and then we will ask for the backup. Right, to be able to support that, because things can happen, right? Somebody could have a data entry error when they're inputting the person's birth date, and that's maybe something that happened for this instance, right? And if they were, we don't test 100%, but
So you pull.
doing the sample that we would ask, and so if we would notice the difference, but then we also look at procedures of what are your procedures to make sure when the information is initially input.
Yeah.
What are the controls to make sure those types of things?
Okay. So likely in this circumstance, it was in-house that we found out this was incorrect. It wasn't through.
That wasn't as a result.
Yeah, not the specifics of this case, but for example, if somebody joined the county, became a member of the pension system, we get the data from the department that's sent over, and the birth date comes over to us, and that's what we base the membership on. I mean, back in the legacy Plan D, it was age-based contributions. So if we had an older age or a younger age, the contributions would have been collected incorrectly at the end of the process. If the age is wrong, the retirement might be calculated incorrectly because we have the wrong age. And then when we find out that it was different through whatever means we found that out,
But again, that's likely in-house. It's not through
likely
this
through
audit.
some of the controls in-house that we applied to the data.
Okay.
And I can speak from experience. If they do these testing, they often come back to me, say, hey, Nate, we identified these discrepancies that don't make sense to us. Once I have that information, I work internally, generally with benefits, to hunt down the necessary information, either to validate or invalidate what is happening. And if we find any issues, then we work with benefits to correct them. So I'm not speaking directly to that issue, but every year over year, they are identifying these discrepancies, and I have to work with the team to validate that the data is either correct or if there's any changes that need to be made. Generally, it's the data is correct, and they just need additional information. And working at LACERA for 16 years, I know, oh, I'm looking directly at the contracts they made a purchase, or maybe they stopped and started working, so their date should be pushed back, and I can work with them to validate those areas where they have some concern. So that is a regular part of the audit from year to year.
Okay, thank you.
Trustee Green?
Thank you, Madam Chair. I mean, my understanding of the process, this all falls under good governance. We're bound, obviously, by Searle and PEPRA and whatnot. We have our internal audit, then we have our actuary. It's not just, the mortality and stuff like that. You're also validating the actuary report and everything that goes along with it. And like, census data, like you talked about, and, considering all of our policy internal audit controls and validating those. So that's part of that. It's really, each hand is washing each other, and it just strengthens it. Our policy, and you guys are bound by GASB, right? To do, you're not going to, like, he's not going to give you guys $20 to, drop a zero or something, right? So, you probably have to add more zeros to that 20, but anyway, but yeah, I really appreciate, this risk management process, ultimately for the pay of our funds. And also it's just another set of eyes looking back on something. I always equate stuff to firefighting. As a captain, I can't see everything, and I rely on well-trained individuals. I'm going to get them the training and have a standard, operating procedure. And one of my standing orders is that, you see something, say something, because, I'm not infallible. Even though I tell my kids that, Dad's always right. But so I really appreciate the work, and, don't ever apologize for the length of time it takes and being thorough and everything. And it really comes back to our staff and our actuaries that we're hiring and everything else, that we're making good decisions. The financial teams making good decisions. So it's really appreciated. And yeah, that's it. And if this is the end of the relationship, thank you for all the work you guys did over the years.
Thank you. Appreciate that.
Okay, Larry?
Thank you. This is a good, clean audit, and appreciate all the input, and the presentation is really good. I just wanted to make sure that we recognize too all of the work that fiscal services does behind this fiscal area. There's a lot of work put into preparing these statements. You outline kind of the different roles and responsibilities here. I mean, we pay for that one page that says, your opinion, right? And that's important. But there's a lot of work that goes on behind the scenes. And I just think that it's important to recognize, the folks from fiscal and investments that contribute, and all of the staff that contribute as well. I think it was a good audit. Very nice. Good job.
Thank you.
One more thing, just thank you for a great 9 years, and maybe we will meet again.
Absolutely.
Thank you.
All right.
Thank you.
Okay, next we have our CEO presenting the quarterly strategic plan update.
Okay. Good morning, Chair Martin. Good morning, committee members. I want to just provide a little bit of context with respect to the quarterly report and the overarching strategic plan document from 2023 that was approved by the Board of Retirement. As a committee of both boards, we understand that obviously with the Board of Investment and Board of Retirement, they both have different charges as it relates to investment and oversight of the investment, pension and OPEB fund, and obviously the Board of Retirement have an oversight of the administration of the system. Chair Martin, you referenced that you weren't aware of the Board of Retirement strategic plan, and I think those that sit on the BOI have a blind spot on what's going on organizationally, especially when you have a committee of both boards, and this particular committee that has audits that represent operational activity. I think it is important to have context and background on what we're focusing on and what our strategic efforts are. So I want to just walk through a couple of the documents that you have in your packets. You have the strategic plan, Board of Retirement strategic plan that was approved in 2023. It's a 5-year roadmap, and there's several details there that I'll walk through at a high level. You also have an informational item, which is the strategic plan quarterly report. This is a report that we provide to the Oversight Operations Committee as part of the BOR. And that's a quarterly report. I think the report you have is from October or September. So the plan, the Board of Retirement strategic plan, was an inclusive process that started back in late 2021 and concluded in 2023. It really focuses on LACERA's organizational maturity and the foundation around improving policies, procedures, process, and governance. We've worked within this plan over the last 24 months or so. And part of our process as well, outside of the governance structure with the BOR and the Operations Oversight Committee, is internally, we do have these annual meetings, internal meetings that we call management offsites, that we meet for a day and talk about our focus, our progress, and then what we're going to focus in on the following and upcoming year. So the 5 pillars that we have outlined, and I want to just briefly highlight the corresponding objective to those pillars. So the first is superior member experience. First and foremost is to be continuously improving our member experience. As I stated, we've worked over the last 24 months on certain aspects of that strategic goal, and some of those are outlined in the quarterly report. A few things that we focused in on is ensuring that we have a consistent omni-channel experience across all stages of a member's journey, whether that be by online, phone, or in person. We also are looking to enhance educational content, which we already have, whether it's through videos on our YouTube page or various content within our website. So that's underway with the Superior Member Experience Subcommittee that's working on some of those charges. We also have a comprehensive digital strategy that's currently being developed and actively being worked on with our systems team, our member operations group, and others across the organizations, as well as communications. And lastly, a particular focus, as was highlighted in one of the audits, on our retiree healthcare, both from the experience of our retirees, but also ensuring that we have good operational controls within retiree healthcare, some of which was highlighted again this morning as it relates to potential automation. Second pillar within our strategic plan for the Board of Retirement is innovation through technology. We see that as an opportunity for maturity to make sure that we leverage certain technologies and softwares throughout LACERA, which we have over the course of the last 2 years. One focus is ensuring that we have a business intelligence program at LACERA, working through with our Chief Technology Officer and our systems team, is building up our data lake, data analytics, as well as business intelligence program, which we're well underway in terms of making sound data-informed decisions. We also have a project around our knowledge management. I know in some of the engagements that the Audit Committee highlighted, this concept of knowledge and making sure that we have knowledge as people retire. We want people to retire. Like, as I always say, we're in the retirement business, but making sure we have a thoughtful and methodical way in which we capture that knowledge to train the next, the next technicians or subject matter experts at LACERA. We also have another core outside of members is obviously our people and investing in people. So we have 3 particular areas of focus there. Our website, we just communicated our statement of commitment to inclusion, diversity, equity, and accessibility, and providing a framework to ensure that we have an inclusive and inviting environment, not only at LACERA, but also in the work that we do externally. Developing and training a training and development program that supports continuous learning and career growth. That's an initiative within our HR organizational development department that's currently being elevated and lifted in terms of the framework. And then lastly, and this has been a constant, I've been here over 4 years, and this has been constant, is our hiring, reducing our vacancy rate, simplifying our hiring processes, and making sure that we're onboarding top talent at LACERA. And some significant strides have been made with our talent acquisition team, our HR team in terms of policies, procedures. Obviously still more work to do, but that's an area of focus that we had within our strategic plan. And the final 2 is compliance and enterprise risk. This particular committee has been a benefactor of our efforts around ethics and compliance. It was once called the Audit Committee. Now it's the Audit, Risk, Compliance, and Ethics, the ACRE Committee. So really advancing and maturing our area of focus around ethics and compliance and developing, really a best-in-class program. And certainly made a lot of strides in that arena, and I'm sure you'll hear more in the later presentations. And then implementing a risk management framework, which we're in the early stages of that work as well. And lastly, fiscal durability, developing and supporting tools around enterprise-wide fiscal responsibility. And we also work collaboratively with our investment office to update our funding policy, which that has concluded. So that just gives you kind of a high-level walkthrough of some of the 5 pillars that we're focused in on, and obviously the corresponding objectives to those pillars. We're 24 months in, we have 24 to 36 months left. It's a pretty aggressive strategic plan. I know oftentimes, the sweet spot is 3 years. This is a 5-year plan, but part of that is knowing that we had a lot of foundational, operational, administrative functions that we have to and continue to lift up to ensure that we not only provide better service to our members, but obviously work more efficiently internally and in the day-to-day work that our team engages on. And with that, again, stand for any questions related to both either the strategic plan that you have in front of you or the quarterly report that we'll be providing there hereafter as an informational item to ensure that the committee has a pulse of our progress around our strategic plan.
Trustee DeRosa, is your hand left from before? Okay, so no questions. Thank you. Thank you personally. This is great and for us to continue to have the updates. This is a pretty comprehensive strategic plan and it looks like you've made a lot of progress. So, and I appreciate you taking the time to sit here and share it with us.
Team's effort, definitely. Okay, thank you.
Looks like we're ready for Code of Ethical Conduct. There we go.
Good morning, Chair and Trustees. I'll let the slides pop up. All right. So I am Jess Rivas, Staff Counsel, and I am here to provide our update on our Code of Ethical Conduct. Steve Rice, Allison Barrett, and myself have been working on this throughout the past year. And so we're really excited to share our draft with you, get your feedback so we can incorporate it before bringing it back to this body for a final recommendation to both boards for approval. So let's jump right in. Next slide. So to start, what even is a Code of Ethical Conduct? In short, it's a key document that establishes standards of conduct and internal controls to reduce ethics and compliance risk. Effective ethics and compliance programs promote a culture based on ethics and compliance, and the code is the foundation of our culture and our program. In DOJ, evaluations of corporate compliance programs, whether there even is a code, is the first thing they look for. Next slide. So it's a very important document for us. So our current Code of Ethical Conduct was last updated in November 2021. We're on a 3-year update cycle, and we took a little bit longer this time to update the code because we did do a full rewrite, which we'll discuss as we get through the slides. Our current code uses dense legalistic language. It's very text heavy. It's not organized around themes or larger issues and is simply a list of topics. Next slide. Our new draft code is hopefully, we hope it's adopted in early 2026. It has improved organization, uses simplified, clearer language, and is much more comprehensive. And you have both codes in your packet. I believe Exhibit A is the new one and Exhibit B is the current code. Next slide. So as I mentioned at the beginning, we've been working on this throughout the year. We started looking at best practices and examples across industries and used them as our inspiration to completely rewrite the document. Even those sections that have carried over from the current code have been rewritten.
Oh, no caller.
Are we good? I'll carry on. We collaborated both internally and externally. Internally, we worked with LACERA's executive team, the Management Action Committee, our Ethics and Compliance Committee, and subject matter experts throughout the organization. Externally, we work with LACERA's Ethics and Compliance Consultant, Rebecca Walker, LACERA's Fiduciary Counsel, Ashley Dunning, and Gartner, which is the compliance consultant used by LACERA. And we use both of these groups, internal and external, throughout the process. They saw multiple drafts. They are working with us through each iteration. And then lastly on the slide, I want to highlight that we worked with a staff focus group back in October that included a diverse cross-section of employees. And overall, their impression was very positive. They really appreciated the new organization, new visual style, the simplified language especially. And they made several suggestions that are, a couple of these are called out here for example, that we hope to incorporate. And again, just make it a more helpful document for staff in their day-to-day and trustees. So that's a helpful document to consult and reference. Next slide. So in terms of organization, one of the things we're most excited about is that we were able to organize around our values. Our values are the foundation of our culture, and our culture is rooted in ethics and compliance. So we were thrilled that they lined up so nicely and covered all the topics we needed to cover. In terms of style, again, this was a full rewrite. And so we mean exactly that. Every section was rewritten to use simpler language, to be more easy to understand. We also made an effort and were intentional about using employee-centric language as opposed to organization-centric language. We use first person plural throughout where it was appropriate. And studies have shown that those two things are more successful at affecting behavior. Kind of makes it more personal and more helps people identify themselves in the text as opposed to being more abstract. In terms of appearance, we wanted to strike a balance between this being an important reference document, but also something that's visually interesting and not just page after page of text like our current code. We work closely with communications on different design elements like colors, headings, call-out boxes, links, photographs throughout. And we're continuing to work on communications on the design, so please let us know your thoughts. We'd like to incorporate those as we finalize the document. Next slide. We also wanted to make sure that the code is comprehensive, so we've added a number of topics. They're all included here. These are all the new topics. That did make the code longer. It's currently up to 41 pages, up from the code's current 27 pages. It's on the longer side for codes, but it's not completely unheard of. Much of the length is due to design elements, so pictures, formatting, etc. So it's not all additional text. So overall, we think we've struck a good balance in terms of length and how comprehensive it is, but are eager to hear your thoughts. Next slide. And so the last thing we wanted to be sure to call out is two key substantive changes to the code. Other than these two, the code is largely restating the same policies or adding policies that have already been adopted. So we wanted to make sure you're aware of them and get your feedback. So the first has to do with gifts, honoraria, payments for travel and loans. And the current code essentially defaults to the FPPC regulations on each of these items. Our proposed change is to set a higher standard than the FPPC regulations, saying we will not accept anything unless we pay for it. So our goal is to reduce the appearance of conflicts of interest and improper influence. And to help make this more clear, here's a practical example. So when it comes to gifts, so while the FPPC does allow gifts up to a certain amount annually, currently it's 630 from a single source for this year. And were you to accept a gift, you would disclose that on your Form 700. Our proposal is that moving forward, no one would have any gifts to disclose on their Form 700 because they either didn't accept them, LACERA paid for it if it was a legitimate business expense, or the official paid for it themselves. However, we would still follow all other FPPC regulations, most importantly define gifts and have numerous exemptions. For example, gifts from family members, mutual gift-giving relationships, for example, with colleagues or other trustees. You buy someone lunch, they buy you lunch the next time around, those sorts of things. There are numerous exemptions to the gift definition, and we would continue to follow those as set out in the FPPC regulations. The next change or substantive change we wanted to direct your attention to was our nepotism policy. In short, we've made it more robust and comprehensive. There isn't a separate nepotism policy document for the organization right now. That may ultimately make sense moving forward. We're going to continue to work with HR to determine if that is something we should implement in the future. Key changes to be aware of with the nepotism policy. It now applies to hiring, promotions, and contracting, so not just hiring promotions. It also applies both to relatives and personal relationships. So not just relatives, and personal relationships are defined as cohabitation, romantic partnerships or dating, and financial partnerships unrelated to one's job duties. And we also are requiring all trustees and staff to let HR know if they know someone who is applying for a LACERA position or contract, so they can assess the situation and make sure we're avoiding any potential conflicts or improper influence. And our goals, of course, here are to avoid nepotism, the appearance of nepotism. We want to hire and promote the best candidates, and of course, select the best contractors. Next slide. So we plan to come back to, we plan to incorporate your feedback that we get today, the staff focus groups feedback into an updated draft, come back here to this committee in February, and then hopefully receive a recommendation to take it to both boards for their final approval. Following that, we would distribute the code organization-wide. We would have training on the code, and then prospectively, everyone would get trained upon joining the organization and every 2 years after that. And we're going to continue to explore other methods to promote regular engagement with the code. We don't want this to be a document that just sits on the shelf and no one ever looks in it. We want people to regularly engage with it, perhaps through a shorter handout that people can reference, make it a regular item at monthly staff meetings, a regular item in our staff newsletters, et cetera. We really want to continue to make sure this is in front of everyone's eyes throughout the year. So with that, I'm happy to take any questions and I'm eager to hear your feedback.
Trustee Me.
First of all, thank you so much for the presentation. And then I enjoy reading this document a lot,
great to
cover
hear.
a lot of items that I could not even think of myself. So I think it's very comprehensive document. And also glad to know that, Christmas come in, I still can accept gifts from friends and families.
Yes, that is one of the main exceptions. And if anyone, of course, has any questions, that's what we're here to help you work through
Right,
and figure out. So
yeah. So just all comment about, this document, right? Excellent job. But I want to point out to management that this is just the first step. We haven't perfect papers, right? This is the first step. So most important after this fourth step is the implementation, execution, right, of the ethic. I'm thinking how to make it effective, how to make sure the entire organization, everyone, following it, incorporate it into their day-to-day work, their decision makings, make sure every decision they make is consistent with LACERA value, right? I think one important thing to point out is that it's important for management team to lead by example. So everyone that is supervisor, manager, leadership, executive leadership, you're leading people, you're influencing people below you that report to you. If you don't help yourself to that standards, it's impossible to expect yourself to follow. So I think it's critical for managers to lead by example and on a daily work, emphasizing this. I'm saying this also because with the context of reading, the culture survey result, so I think it's something important for management to note and then work on. And then earlier I made a comment on the offsite spend, look at the percentage, it might look like a lot, but if you look at, what the value can get out from that management offsite, it's money well spent if you can have the value of it. Because what I see is that it's important for management team to collaborate, to work with each other, have the team building and set the foundation and then work on the strategy. So I have a humble suggestion for this management offsites that maybe consider talk about that culture survey, the work that we need to do there. So just a humble suggestion.
That's the main focus.
Yes.
Trustee
Thank you.
Durazo.
Thank you so
And
much.
one more thing.
Oh, go
I'm so
ahead,
sorry.
sorry. I
One more
apologize.
thing. Besides leadership management right here, right? What I want to say to my colleagues that as a board trustee, we are, the leadership on top of the organization is also important for us to carry ourselves in the highest standards we can as we set the tone, on the top. We set the tone on the top, how we conduct meetings, how we carry ourselves and show respect to each other in meeting, closed meeting, open meeting. Those are critical, those are important that we should, we should always think about that, how we, show ourselves, show up in this ballroom as we impact everyone else the most from the top. So just a humble reminder. And if it's possible, I humbly suggest maybe once we finalize this version, perhaps we'll have a training to just do too.
Yep. It's perfect.
Great. Thank you. That's all.
Okay,
Thank you
Trustee
so much.
Durazo.
Yes, great job. I enjoyed reading it as well. And just something to think about, perhaps kind of the county does this with their employees. We sign a document, a nepotism, we have to complete it. So that may be something that can be considered and actually have it, their signature confirming.
We will work with HR on that specifically. Or you're suggesting specifically as the nepotism policy?
Yes.
Got it.
Mhm.
As part of the hiring and contracting process. Yes.
Thank
Thank you
you.
so much for that. We'll work with HR.
Larry, go ahead.
Yeah, this is such an important document, and I think you did a great job, laying it out. And I appreciated the diagrams in here about the ethical decision-making processes, and it's a good guide for staff. And I think you did a great job. Can you address for the committee though, how do you plan on rolling this out to staff and making sure it doesn't just get on the shelf somewhere? How do you keep it alive over the next, until we review it again in the next 3 years?
Exactly. And that is part of our next step. But as I mentioned, we initially training. We want to make sure everyone knows that this document exists.
That's the
what's
onboarding.
in it, onboarding. But once this is fully adopted, we want to do organization-wide training for everyone who's currently here, because a lot of folks probably haven't seen it, haven't taken a look at the current code in some time. And so just as a step one is making sure everyone's on the same page with this document, knows what's in it, knows that it's there as a reference for them to always consult and engage with. But beyond that, we want to make sure, again, it's at the forefront, ethics and compliance are at the forefront of everyone's mind. So bringing it up monthly at brown bag lunches, in staff newsletters, encouraging our managers to bring it up regularly. You're going to hear from some of my colleagues about things that are done along those lines with the culture survey and our existing ethics and compliance program. But again, it's not just a standalone document. It's part of affecting our culture. So we're going to continue to brainstorm ways to make sure that happens.
Yeah. And similar to the last statement on the nepotism policy, is there any thought around staff, certifying that they've read and they agree to, abide by this code of conduct?
Yes, I believe that is part of our plan. I'd have to double check my notes, but actually let me just scroll to the draft. I think at the end we do include an attestation, but let me double check. I can't find it in your 528 page packet. We will. Yes, that is part of the plan. So thank you for bringing that up.
On page 387 of the whole packet, there is a training and attestation part of it, but it doesn't really address attestation so much. Oh, I see on the last, the staff trustees and staff will attest. I see. I didn't see that last sentence there. So thank you. I saw the emphasis on training, but I think the attestation part of it is really important too.
Both are very important. So thanks for highlighting that.
Just a comment, I was actually going to ask the same question. So it's important. And I was part of an organization where we did a lot of different things with this. We played games with it. We sent out emails, random emails, who could fill in the blank and you get a little prize, just, fun stuff like that to really keep it, on everybody's mind. But this is just, this is an awesome document.
Thank you so much. And that is, we've in our brainstorming and not come up with games. So that's a great one. We will take that up.
Thank you.
Thank you.
Thank you for your presentation.
Thank you so much.
Madam Chair,
Go ahead.
Awesome. From, concept to fruition and the Board of Supervisors, I appreciate you including the Board of Supervisors motion packet. I'm going to ask about the salary. I know they did a study and it's in line. The existing salary schedule that they noted, the LS 12 and the N23, are they creating a new, did they create a new salary schedule? Excellent. Don't get all emo on me.
No, not emo today. Excited, but not emo. You're jumping ahead to the work plan status report and the addition of the class specifications for the CECO, which I will get to, but you're kind of stealing my thunder.
All right,
it's like my
I know. That's why I said don't get emo. I'm excited, and I do appreciate it as a part of the complete packet. Excellent work on all this. And just that, just for a reference, it'd be nice to have an excerpt of that salary schedule because 6.20.050 is like a long thing or whatever it is.
I'll probably
Section 6.
lean on Carly when we get into the specifics.
No, yeah. So no, great. I don't want to steal your thunder, but I'm glad. But thanks for that. And it's good. It's awesome.
So with that, we're transitioning to the work plan.
All right.
Okay.
Thank you very much.
Any more questions?
And appreciate all the feedback. Thank you.
Thank
so
you.
Much.
Thank you, Madam Chair. Thanks for entertaining me. I'm hungry.
Anytime.
Trying to get the food.
I appreciate it. I'll talk fast. Good morning, Chair Martin and trustees. We're back with updates on the Ethics and Compliance Program Foundational Work Plan. This is a milestone report. The work plan was adopted just over a year ago in October 2024. Next slide, please. Not only have we implemented each work plan activity listed on this slide, but significant progress has been made and ethics and compliance are becoming more and more ingrained in LACERA's culture. We are doing what we said we would do, laying the foundation for the program. readying LACERA's House of Compliance for the arrival of the CECO. So here's some highlights of the progress we've made since we last met in August. Next slide, please. Because it's important to emphasize the why of each activity, we've again included the program objective at the top of each slide. These objectives are from the US sentencing guidelines, which articulate best practices for effective ethics and compliance programs, beginning with education and communication. Education is critical for fostering a culture of ethics and compliance and risk awareness. Our Ethics and Compliance Committee, the ECC, is an essential part of our program's education effort. The ECC is comprised of LACERA staff from each division and all 3 lines of the IIA 3 lines model. The ECC participates in all program work plan activities, including education. ECC members regularly attend educational conferences on the elements of effective compliance programs through the Society of Corporate Compliance and Ethics Professionals, the SCCE. That's the organization that administers certification. Recent conferences have included a compliance auditing and monitoring workshop. And in December, we are planning to add to our certified compliance and ethics and professional roster when 5 to 7 more of our ECC members will attend the SCCE Academy and sit for a certification exam. Meanwhile, the ECC continues to facilitate its own in-house education. It started as the message of the month, but we got excited and conversations ran deeper than anticipated, which required additional time for our first topic, which was the ever fascinating risk awareness. So this educational activity has now morphed into the message of the quarter. The message is an important tool to not only educate the entire organization on ethics and compliance, but also to advance our culture of ethics and compliance. So at ECC meetings, committee members receive educational materials, otherwise known as the message, and those messages prompt discussions with their respective divisions. So they get the materials at the ECC meeting, then go back to their divisions, and then come back from their divisions to the ECC with feedback. And ultimately, these discussions evolve into practical application and integration into our daily operations. Our first message was risk awareness. Our next will be ethics this afternoon, in fact. And both ECC messages are attached to your materials if you want to take a quick look-see. Next slide, please. Policy management. Our frontline managers continue to monitor divisional policies and procedures to determine when new policies are required and to keep existing policies current. So the Ethics and Compliance Policies Subcommittee is available to meet every 2 weeks when division subject matter experts submit new policies, policies scheduled for regular updating, or when policies require revamping to obtain the intended objective. The subcommittee reviews each submission for clarity and effective risk mitigation. Policy submissions are then forwarded to the full ECC for final review and posting on LACERA's Policy Library Compass. As you can see, we've been quite busy since August and have undertaken several policies and charters listed on this slide, such as the Artificial Intelligence Policy, the Intellectual Property Policy, the ECC Charter, and the Ethics and Compliance Program Charter to keep it aligned with the most recent update of the Department of Justice Evaluation of Corporate Compliance Programs. An updated version of the program charter will be presented to the AGR Committee for review in early 2026. Next slide, please. Risk assessments. The Aligned Assurance Team, Internal Audit and Legal, have now interviewed each division manager regarding the 2025 Annual Audit Risk Assessment, which included the compliance program's foundational assessment of ethics and compliance risks. This slide lists the top risk categories identified by division leaders throughout LACERA, and those include staffing and succession planning, operational and process efficiency, culture and leadership, compliance, security, and risk management. Once the CECO is hired and the office established, these areas will become a part of the work plan for the compliance office. So controls can be put in place and those controls can be monitored. A comprehensive report on the 2025 risk assessment and ideas for improving the risk assessment process in general will be presented in the first quarter of 2026. One consideration we have to advance the assessment process as well as our risk awareness campaign is to include frontline staff and get their input on ethics and compliance risk in addition to management's perspective. Next slide, please. Thank you. Christina and Armand are going to go dive deep into the culture survey results themselves for our next agenda item. Consider me their opening act, and I'm going to provide an overview of the why of it all, as well as the process. The baseline culture survey is a critical milestone for the ethics and compliance program because culture is flagged as a top risk in every organization. But it's not simply about issuing the survey. We must listen to and take meaningful action on the results. What are we going to do with the information staff has provided? How are we going to shape our culture so that it reflects our values in living color and in 3D? The baseline survey shows us where we are. A culture action plan will guide us to where we need to go. The survey results were shared with the entire LACERA team at the October Brown Bag, followed by focus groups where we got granular with the results and prioritized vulnerable areas, namely gaps between what we say our values are and how we practice living them at work every single day. Is everyone being held to the same standards? We had a total of 9 focus groups comprised of 75 randomly selected participants who met within their working groups, leadership, management, supervisors, and individual contributors. The objective was to have an inclusive representation from every level and division of the organization. The focus group feedback will be incorporated with the survey results into a culture action plan, which will serve as an integral part of the management offsite in December 2025, and then presented to the ACRE committee in early 2026. Staff is looking to leadership to act on the results, to act on their feedback. And the only way we can prove action is when we deliberately take it. So with its oversight duty, the ACRE committee will hold leadership accountable for implementing the culture action plan. Please. Follow-up surveys will be conducted regularly thereafter to track progress. Next slide. The code of conduct. Thank you, Jess, for presenting on the code and your diligence in its renovation. Jess worked like an air traffic controller, getting feedback from all those groups that she mentioned and compiling it into the document that you have before you today. It really was a Herculean effort. We appreciate your thoughtful review today. And once your feedback and as well as the focus group feedback is incorporated into the code, we'll be returning it to the committee and then forwarding it to the boards for final review, posting on Compass, and then training. And hopefully that'll all occur in early 2026. Next slide, please. Now I'm going to pause for dramatic effect. The Board of Supervisors has now approved an ordinance adding LACERA's Chief Ethics and Compliance Officer and Deputy Class Specifications and Salaries to the County Code. We did it, and largely with the help of Human Resources. Thank you, Dr. Natoya, Sharon Norton, and other HR professionals who really helped us get over the goal line. And now the hiring process begins. The Executive Office, HR, and the Ethics and Compliance team, we're going to be developing a CECO recruiting plan, which we will bring to the ACRE committee and boards for review in early 2026. And with that, next slide, and I will stand for any questions. Yes.
Yeah, thanks so much. I almost shed a tear with you. Yeah, 67% return on the survey is really great. I mean, it's very brave of people to participate, especially in something new. As Aesop said, people are afraid of what they don't understand sometimes. So, but a couple key points. I don't know what to start with. I'm glad you identified end user input because, you know, and I think that leads to my other comment about under policy management. And I guess I have a question regarding that. But yeah, sometimes things are implemented and the end user has to just eat that sandwich, right? And I think that, you know, there's a lot of great ideas out there, and I want to encourage that to be part of the continuing process that somehow, and you know, and that goes into the education. The more the workforce understands this, the more that you're hopefully that 67% grows to something greater, and you're really getting and it has to be a non-punitive, of course, all that stuff, and even a chance for anonymity. Just if someone says, hey, this new thing sucks, and this is what's happening, and it's not working. I use payroll as an example. ECAPS, implemented in March 2012, was not a one fits all thing. There's certain areas, particularly my work at the union fire department payroll is so wild, it just doesn't work, and it's been problems since. So 13 years of it. But so I'm glad you identified that. I mean, you're always thorough, and your team's always thorough, and so that's huge. Please keep that up. The education I already addressed. But under the policy management process, that kind of think tank that's happening, my question, I guess, is that again, someone comes into a new position or something, has a great idea. I mean, there might be something codified that we have to update, right? We have to keep up and be relevant, right? But outside of that, like a new WASI plan, let's say, the analysis paralysis, right? Is there? I didn't see it written in there. So my question is that subject matter group and that 2-week interval when you're looking at something, is there going to be a stopgap? Like, hey, no, we're not going to do this. Great idea, but no. Then what's working is, it's not broke. Let's not fix it.
Yeah, part of this committee is that if someone says, hey, I got this policy, part of it is, does this need to be a policy? Is this a procedure? Is this a business rule? Is this something that's simply guidance? So yes, that analysis does go through that 2-week process. We don't necessarily meet every 2 weeks either. It's if someone comes to us, we are available. We have a standing meeting every 2 Thursdays. We canceled last Thursday because there was nothing available. But yes, I would say it's fairly efficient at this point. Whether it's somebody bringing us a new idea that does become a policy, or maybe it's a procedure, or it's something that simply needs to be, it's up for review, it's 3-year review, or say the policy procurement of goods and services, it needed tightening because there were some stopgaps there. So they brought it to the committee, and that's now actually gone through and through the ECC and back to the board. So it seems to be working in terms of the flow.
But if let's say there's a mid-level manager, it's like, no, we need this to happen, but it doesn't need for all those other reasons to happen. Maybe even cost or just the making the new thing would, or vice versa. The upper level managers say, we're going to implement this. Is there a process for, like, what happens when it gets to impasse, and who's got the ultimate voting card on? I mean, aside from the law,
Of course,
follow what I'm saying, but
I mean, ultimately the executive office, but then if it's something that is urgent, if it's, God forbid, we have another pandemic and we need to now come up with a new policy to telework. I know that already happened, but if it was something urgent, no, we don't need to run through all the red tape. I hate to call it red tape because it's not working that way right now. It's working very smoothly, but ultimately the executive office says we need this now, it's going now. And maybe we write the procedure or the policy later down the road when we're out of the fire.
Right. I mean, and obviously, I mean, it's like, power to the people, right? I'm what I mean? I don't want stuff ramrodded or vice versa, I mean, for efficiency. So that's all. I needed to address it. So thank you. Looking forward to it. And then lastly, any sneak peek on our hiring? Can you leak some information on how it's going?
I know that probably after this meeting, I will be getting a call from Sharon Norton. Sharon, I know you're listening, and we'll be setting up a meeting probably in the next couple of weeks just to start getting that recruiting plan going. No one is more excited than me to get that recruiting plan going and passing the baton. So yes.
Okay, any more questions? I have a question for the board. Do you want to break now or power through the culture study and then take a break before we go into exec session? What?
Power break.
I
see power break.
Okay, we're having a power break for 5 minutes. I know, me too. Thank you.
Today, I'm happy to have Armand Castillon from HR with me. Since this is his first time presenting to the ACRE committee, I'm going to let him introduce himself.
Hi, good morning. Good morning. Good morning, members. Good morning, Madam Chair. My name is Armand Castillon. I am fairly new to LACERA, started in 2024, but I overall almost have 20 years of civil service experience. So I'm happy to be here. Thank you so much for having me.
So today we are going to be presenting on the 2025 Culture Survey results and insights. As Ms. Barrett mentioned, this is our first survey, so this is really our baseline survey results. Next slide, please. So Armand and I worked to analyze the culture survey responses throughout September and October, and recognizing that culture is such a significant aspect of organizational effectiveness, we're here to walk your committee through the results and insights that we shared at the October Brown Bag meeting. So this is a high-level agenda. Next slide. So why a culture survey? We launched our first culture survey in July 2025, but our conversations about the importance of understanding and strengthening our culture began back in 2024. Before I continue, you may be wondering who that we includes. The executive office championed the culture survey and provided strategic direction, and human resources, ethics and compliance, and internal audit all work together because culture impacts everything that we do, from how we treat each other to how we manage risk and how we stay compliant. The executive office determined that this survey would be managed internally due to its strategic significance to LACERA. And the overall purpose of this survey was to strengthen our culture, allowing us to better align our culture with our values. Next slide. So first and foremost, all of the responses were anonymous. We did not collect any personally identifying information, and therefore this presentation contains no data that could be linked to individual employees or an individual response. Confidentiality in a culture survey is so important because it encourages honest and open feedback. 67% of staff participated in our first culture survey. That's 345 out of 517 team members, which is a strong response rate, but there is room for improvement. For an organization our size, the industry standard is typically around 70 to 75%. You will see when Armand presents on the next slides that closely related responses were grouped together to help illustrate general alignment and identify broader themes across the organization. So we went from 6 different categories down to 4 categories. Our interpretation of the data, if the response was an agree, we saw that as an area that was working well. If it was a neither and a disagree, it was an area where we can further improve. And questions where the respondent skipped were identified as opportunities to explore. This may reflect either disengagement or uncertainty in how the question was structured. Next slide. So now Armand is going to walk you through the next couple of slides.
Okay. So this first slide was constructed as more of a general overview question to get a baseline of how staff view each level of LACERA in relation to the IAC values. From here, each subsequent slide will focus on a specific IAC value. So questions 1 through 4 will reveal that overall staff feel values are most closely aligned at the team member level, but decrease as we go up the organization. Starting at the team member level, which is question 4, we see that 268 participants agree that their colleagues act in accordance with the IAC values. Moving up to the supervisor level, question 3, 265 participants agree that most frontline leaders act in accordance with the values. Next, the division manager level, question 2, There is a noticeable decrease in agreement, with 239 participants agreeing that the division managers act in accordance with the values. Lastly, question 1, we have 230 participant agreements that executive leadership acts in accordance with the IAC values. This pattern highlights a typical challenge within organizations, which is a proximity and visibility challenge. The further away one is from one's daily duties, the harder it is to see how those values are actually applied. Our opportunity is to bridge the gap through increased visibility, consistent communication, and transparent decision-making at all leadership levels. Let us drill down to our first IAC value. Next slide, please. Results on ethics and integrity. These 3 questions examine whether staff across different levels of LACERA, from leadership to managers to team members, act and make decisions ethically, fairly, and honestly. As we look at the results of these 3 questions, we see a familiar pattern. Ethical behavior is seen most closely aligned at the team member level and decrease as we go up the organization. In addition, as agreement decreases, disagreement and neutral selections increase. This pattern supports the previous theory that there may be a proximity or visibility challenge. Even if leadership makes ethical decisions, if staff don't see the process or understand the reasoning, their confidence in leadership can be lost. Next slide, please. Continuing on results on ethics and integrity, the next 3 questions examine the ethical environment at LACERA from different angles, whether unethical behavior is allowed to continue, whether ethical behavior is actively promoted and celebrated, and whether staff feel protected from pressures to compromise their personal ethics. Question 8 was worded a little differently than the others. It asked whether unethical conduct is tolerated. For this question, disagree is actually the response we want to see, as it means staff believe unethical conduct is not tolerated. Although 168 participants disagree that unethical conduct is tolerated at LACERA, 160 participants believe unethical conduct is, or are neutral. This tells us that our response to ethical violations either is inconsistent, visible, or is perceived as ineffective. On one hand, we have real strengths. 242 participants agree that ethical conduct is encouraged and recognized, which is question 9, and 278 of participants report that they've never felt pressure to compromise their ethics, question 10. This tells us that most staff's work environments where their ethical boundaries are respected. Next slide, please. Results on inclusivity. These 4 questions explore inclusiveness from both organizational and personal perspectives. Specifically, questions 11, 13, and 14 all measure personal experiences, whether staff feel that they are included at LACERA, valued for who they are, and can authentically contribute their perspectives without fear of dismissal or rejection. At the organizational level, question 12, we have strong agreement that LACERA values diversity, with 261 participants agreeing. This shows our commitment to diversity is visible and communicated. As we move from the organizational values to personal experience, questions 11, 13, 14, we see an increase in disagreement and neutral responses. While all 3 questions received majority agreement, the levels of disagreement and neutrality represent an opportunity to help more staff feel a stronger sense of belonging and valued at LACERA. Next slide, please. Results on innovation. These 4 questions examine LACERA's innovation culture from multiple perspectives, whether staff feel encouraged to contribute ideas, whether the organization actively promotes continuous improvement, whether we invest in adequate resources in innovation, and whether our innovation efforts are actually making LACERA more effective. The results show strong encouragement for innovation and promotion of continuous improvement. However, confidence drops when it comes to resource investment and visible impact, suggesting we may need to strengthen the follow-through on innovation initiatives. We may be implementing valuable improvements, but if staff don't understand what's changing or why, they can't appreciate the benefits. Next slide, please. Results on accountability. The accountability question reveals our most challenging results in the survey. While we see strengths in some areas, there are areas for improvement in how accountability is applied. First, in question 20, 279 participants agreement shows that staff know how to report misconduct, which indicates that LACERA's reporting channels are well communicated. But only 185 participants believe those reports are taken seriously, question 22. This suggests that while systems exist, confidence in how they are used is perceived as limited. In addition, 188 participants feel safe reporting misconduct, question 21. This means 132 participants either don't feel safe or are uncertain. This may hinder our ability to identify and address problems. Lastly, 175 participants, question 23, and 156 participants, question 24, believe non-management and management are held accountable for ethical violations, which were our lowest scores across the entire survey. Next slide, please. Results on collaboration. The collaboration question shows both significant strengths and significant opportunities for improvement. The majority of participants believe LACERA is working to expand opportunities for collaboration, with 208 participant agreement, question 25. But there is an opportunity to strengthen these numbers, indicated by the 71 neutral participants. Question 26 shows that the overwhelming majority of participants, 290, agree that their team's work contributes to LACERA's mission. This is one of our highest scores across the entire survey and speaks to a strong purpose and meaning to our work. This is powerful and should not be overlooked. This represents a strong organizational purpose. Question 27 shows participants also feel they have opportunities to work with team members in other divisions or at different levels of the organization. Our most significant opportunity for improvement, question 28, is to make staff feel heard and respected when disagreeing with leadership and/or the majority, as indicated by the 156 participants who disagree or are neutral. Next slide, please. Results on transparency. These three questions examine transparency at different levels, whether leadership practices open communication internally, whether staff understand the reasoning behind organizational changes, and whether LACERA is transparent in its external communications with members and the public. The results show LACERA is strongest with external transparency, with 231 participant agreement, question 31, but decreases at the internal level with 187 participant agreement, question 29. Moreover, with 115 participants selecting disagree or neutral in question 30, this may suggest that staff need more insight into the why behind decisions, especially from leadership level. Next slide, please. Slide 13 asks participants to describe LACERA's current work environment in just 3 words. This open-ended question gave staff the freedom to share their unfiltered perspectives of our culture. With the help of Copilot, we analyzed the responses and organized them into themes. We then put the themes into a SWOT analysis. This allowed us to see the full picture of how staff experience LACERA today. Regarding the strengths of LACERA, work environment, participants frequently used words that pointed to collaboration, support, diversity, and professionalism. This tells us that the positive culture exists at LACERA, particularly in how colleagues interact with and support one another. Moving on to weaknesses, words such as inconsistency, stagnation, micromanagement, favoritism, overworked, and communication gaps were identified as the weaknesses. These themes tell us that there are practices and patterns that are working against our culture and need attention. Encouragingly, participants used words that suggest opportunities: cultural evolution, innovation, growth, work-life balance, and leadership development. This tells us that staff can envision a better future for LACERA. Lastly, participants did use words that reflect threats, such as toxicity, distrust, hierarchical barriers, and lack of accountability. These themes reveal that while many staff experience positive culture, others experience significant dysfunction. The takeaway: The presence of both positive and negative cultures at LACERA means we have multiple subcultures. Staff experiences differ widely based on division, manager, team, and organizational level. This variation shows that we can create supportive environments, but our goal is to spread these successful practices organizational wide and address areas that cause a negative experience. Next slide, please. What type of culture inspires you to contribute and do your best work? We analyzed these responses to this question. 6 clear themes emerged about what inspires staff to do their best work. What's particularly encouraging is that there aren't abstract ideals. They're practical, actionable, and cultural elements that we can strengthen and reinforce. First, collaboration. This was the most frequently mentioned theme. Staff are telling us that they do their best work when they are working together towards shared goals, not in isolation or competition. Next, inclusion. Often in combination with communication, respect, and empowerment, this tells us that staff are inspired when diverse perspectives are valued and everyone has equitable opportunity to participate. Next is growth and development. Staff mention personal, professional, and organizational growth, frequently linking it with empowerment, learning, and opportunity. This tells us that people want to continuously develop and improve, and they're inspired by cultures that support their growth in this journey. Next is respect and integrity. These core values appeared repeatedly associated with trust, fairness, and professionalism. Staff are telling us that they can't do their best work in environments where respect is lacking or integrity is compromised. Lastly, communication and transparency. This emphasizes an openness and clarity. The emphasis on openness and clarity, often tied to shared purpose and leadership, tells us that staff are inspired when they understand the why behind the decisions and feel informed about organizational direction. What's powerful about these themes is that they align closely with our IAC values and with what we heard in other parts of the survey. Staff aren't asking for something entirely new or unrealistic. They're asking for us to consistently deliver on the cultural elements we already promote. Next slide, please. What actions would you recommend to improve LACERA's current culture? When we analyze the recommended actions, we see a clear roadmap for cultural improvement. And importantly, these recommendations align closely with the challenges identified throughout the survey. Strengthening leadership and accountability. Participants want to see leaders at all levels held to the same standards as staff, with consistent consequences when those standards are not met. Enhanced communication. The recommendations span multiple aspects, such as cross-divisional communication, regular feedback forums, transparency in decision-making, and empowering staff to speak up. This isn't about communicating more, it's about communicating differently. Staff want to understand the why behind decisions, have channels to provide input, and see that input actually influence outcomes. Investment in growth and recognition. Staff want a clear career development program that clarifies promotion pathways while also being meaningfully recognized for the work that they do and being compensated equally. Next, foster collaboration and innovation. Expanding on the career development recommendations, cross-training, cross-divisional projects, streamline processes, and creating space for alternative perspectives were all suggestions that were brought up in this question. Support work-life balance. Staff also prioritize a balance between work and life, less workload, addressing staff gaps, respecting life boundaries, and expanding flexible working schedules. The key insight. What's striking about these recommendations is their consistency with everything else we've heard in this survey. There aren't random wish list items. They're targeted solutions to specific problems that participants identified earlier in the survey. With that, I pass it over back to Christina.
Thank you. Trustee Durazo, do you want to ask your question?
Yes, regarding the circular graph, do you think 30% is a high percentage skipping that specific question?
The circular graph?
The pie.
I think we're gonna get to that.
Oh, we're not there yet?
Did we?
Oh, wait, I thought we passed it.
Go ahead,
I'm
Nancy. I go out of turn
sorry.
all the
I
time.
Are you referring to slide 18, question 37?
Yes, I'm ahead. I'm sorry.
No worries.
Do we want to do that slide now? Okay. So maybe I'll just give you the whole discussion first, and then we'll talk about the 30%. The question is, would you recommend working at LACERA? We ask this question because recommendations are a simple but powerful way to gauge how people feel about something. It's a widely used measure of employee satisfaction and engagement. Out of the 240 responses, 195 answered directly with yes, no, or maybe. A small number of people also included detailed comments, which helped us to better understand the reasons behind their answers. So going through to question yes, 12 provided additional information. They appreciated the benefits, pay, time off, holidays, and the hybrid work schedule, which comes up frequently in the next couple of slides. Staff also really enjoy working for a mission-driven organization. If you recall, when Armand went over question 26, 290 respondents said, my team's work contributes to the delivery of LACERA's mission. For our maybes, 23 provided additional information, and 16 of those 23 said they would recommend working at LACERA depending on the division the opening was in. Others said it would depend on the individual person, and some said if the culture could improve. For our no's, 10 provided additional information. 7 of those cited poor culture and poor leadership at the top. To Trustee Durazo's point, 30% or 105 skipped this question. We do think this is an opportunity to explore. We want to understand if this is as a result of disengagement. We're pretty sure that the question itself was not unclear, so there's not uncertainty about the question. Okay, so can we go back to slide 6? There we go. So we asked this question to better understand what would help staff and teams to feel more engaged at work. Question 34, if you recall, was more about organizational suggestions. And this question 35 is more about team-based suggestions. After reviewing the responses, 5 key themes consistently emerged. These themes align closely with what we saw in question 34 and throughout all of the survey responses, and they reflect a shared desire for more leadership support, communication that provides greater transparency for the reason behind decisions, growth and recognition opportunities so that employees see a path forward, and opportunities to bond and socialize with other team members, and work-life balance. The responses indicate that engagement is most closely tied with feeling supported, informed, and recognized, which makes sense because these are the hallmarks of all strong relationships, whether working or personal. Next slide. So question 36 was our most open-ended question. We just asked for additional comments on LACERA's culture. And we used Copilot to help us sort the responses into 3 buckets: positive, negative, and neutral responses. You can see that 30 to 35% provided positive feedback. These are consistent to what we've been talking about throughout. Improvements to culture, responses offered praise for the current leadership team, and people were very appreciative of the flexible work arrangements. 40 to 45% were negative responses. These relate to the threats that Armand presented on in the SWOT analysis: toxic work culture, workload challenges, burnout, and leadership concerns. And we had 30% neutral responses. These included general observations or comments that did not express a strong opinion either way. The key takeaway is that while there are signs that our culture is improving and people see it as a positive, the feedback also shows that these improvements are not being felt across the organization. This highlights the importance of continuing our efforts to build a more unified and supportive LACERA. So we're going to skip the next slide, and because that was the slide, the 37, and we'll be at the timeline. So this timeline, Ms. Barrett already went over with her work plan agenda. I just want to highlight that in October, we made this similar presentation at a brown bag. In November, most of the group discussions have already occurred. And in December, we will be working on developing that action plan. And again, like Ms. Barrett mentioned, we will be bringing the development plan back to the ACRE committee. We want to thank everyone who participated in the culture survey and now the focus groups. We know that expressing our opinions can make us feel vulnerable sometimes, and it can be scary if you're unsure how the survey responses will be used, and it can be frustrating if you feel your feedback is not being heard. So we are excited because we have now completed our first culture survey so that we can better understand our organizational culture and use this data as baseline for future surveys. We're excited that most of the group discussions have now occurred and they've been so fruitful. And we will begin to work on developing an action plan. Last slide is just for questions.
Go ahead, Nicole. I'm researching right now.
Uh-oh. Lisa.
I read through the survey line by line, and then I have quite heavy heart reading it. And then I'm thinking, reflecting on it, is that, sometimes the board trustee, we focus on the items by items the report in front of us, and we might sometimes lose a holistic view of the entire organization, right? And oversight the entire organization is our job. And it could happen to, leadership management too. You might be so busy on a day-to-day operation. However, we'll look past this, like overall view, the entire organization view of, the issue that we not realize it. I think, this survey, help us, the positive side of it, it help us to realize where we're at today, So I'm glad that we did it. I would encourage we continue to do it, periodically, maybe like once per year, once 2 years in future, right? So, and then I do encourage every staff, to continue to engage in this, trust with us that we take it seriously. And then because every one of you, 500 people here, right? Every one of you, you're also part of this environment that you should take ownership of this culture, this environment too. And the way to take ownership is to participate and tell us what you think, so that's your way of, making influence and making change in the organization, so that entire organization work together to get there. So that's my thought on the survey. And then I would recommend, like our chair, to share this survey result to both boards. I think it's important for both boards to see it, so that we have a realization of where we're at as an organization. So knowing where we're at is the number one, it's the first step to go to where we want to be, right? You can't get to where you want to be if you don't even know where you're at. So this is really helpful. We know where we're at right now, and the people spoke loud and clear. And then I think this is a place, a starting point for our leadership management too, to take accountability to rebuild that trust by taking this seriously and working on it. So that's one thing. And then the other thing is I want to relate this to the hotline, right? The hotline that we implemented recently did we have hotline before or until recently? So we had it before.
We had it, I believe, in 2018.
Okay, so wasn't.
But even before that, we had.
Okay.
The external hotline that we created in 2018.
So since we're working on hotline now, and then when we work on something, we want it to be effective, right? Want it to do what they meant to do. So we want to make sure in the time that we improve in this hotline process, this, this is something that we can use to cross-reference, So when I look at the serving, the question 8, and 10, if we go to there. The question 8, even though the question is being asked a little bit differently, but the negative response still the highest among all the questions, 86, and then not engaged 74 and 17. So unethical conduct is being tolerated. And then this related hotline too. This can be reported. Was it reported? Right? It says something about a hotline. And then the other thing, the number 10, even the negative is not that high, but 28 people say that they felt pressure from supervisor, manager, leadership act unethically. That's scary. That's like I reading that. I don't know how to take this. Right? We talked about leading by example earlier. You're leading by opposite example here from the 28 people responding there. That was not reported in hotline either. It says something about a hotline, right? So, and we go to question 21, 22, 24. Let's go there. So this 21, 20, 22, 24, read through here, right? So this is, again, I want to tie to the hotline. So in a couple meetings ago, I suggest, right, how to make sure staff trust that hotline, right? How to make it people trust that they would use it. They're not using it. How do we increase that? So one thing I suggest in a couple meetings ago is that in the workflow that we look at it, perhaps in a critical issue that involve higher level executive, maybe it's the time to loop in the chair, audit chair, board chairs, just so the staff trust this process, right? That's one thing to build the trust. The other thing is I also read at the report, I think Jensen make an excellent suggestion that how we can build trust, like people can trust to use it last meeting, is that in the report, have a column show what action was taken for each report. I didn't see it in this report. And think about it, add it there. So that's the other thing that we can do to build trust, on that hotline report, right? So that's my thought, relating this survey to our hotline, how we implement it, how we improve it, make it more effective. And then humble suggestion back to management team again, this is a step that we can start showing staff that we're taking accountability and build that trust. And then I hope I have faith that we can build that trust all together. That's what I have. Thank you.
Thank you.
Thank you. Trying to get some numbers here.
I had my hand up.
Oh,
You're after trustee Green, trustee Moore.
I am. I can't hear. Sometimes the microphones are not on.
I apologize. You're after trustee Green.
Okay.
So on question 37, the total count of all, you got 345 folks participated, right? Out of the 517 team members at LACERA, right? 67%. But out of that 67%, only 240 people answered question 37. Right. So I was just doing my math on that. What is it? 515, 517. So 40.46% of the entire population answered that question. Is that correct? Anyway, it doesn't matter. It doesn't matter. My point is, it's a smaller slice. Here's where I'm going with it. So, first thing, a security issue, Copilot, or so is there any data information going into Copilot? Or did you guys operate in a closed system, or was it available to the internet?
Closed system.
Okay, great. Thank you for answering that. And then with this data now that we've now mined, which I think is amazing, we can do a lot with it. Have you guys now with this data compared to other defined benefit systems, other companies that are our size and stuff, and and do comparative values of what it's looking like with them, like how we're shaping up in the industry and outside of the industry?
So we have not done a comparison at this time. The questions are unique to LACERA. We developed them in-house. We consulted with Ms. Walker, who's our ethics and compliance consultant, as well as Gartner. But you do bring up a good point, and I think Trustee Green, we could reach out to our peers at other pension funds, and maybe they won't have a one-for-one correlation on the questions, but just the general feedback.
Yeah, with our contemporaries, there's got to be similar line of questions on, because it's the same industry, but even branching out outside the industry. And I want to draw a point. You guys are familiar with the clothing brand Patagonia, right? 91% of employees at Patagonia say it's a great place to work. They rated 4.2 out of 5 stars on Glassdoor. And Yvonne Chenard, that old dirtbag, which is a climbing term, just if anybody's, I'm not trying to be derogatory. I think he'd appreciate that. But he wrote a book called Let My People Go Surfing. And they're a $1.5 billion company. They have 3,000 employees globally, and it's a interesting pre and post COVID kind of business model that produces net income and the other thing, the human value that people fight to get into that place. I want to work there, so I would say that like part of this package, like, so we can really grow with this, is looking out, not just with our peers and everything, but also out into the world of some of these really highly successful places culturally that are that would be fun to do. It'd be such a good thing for us to maybe focus on and make that question of, would you recommend LACERA to work? Because you could pay everybody $1 bazillion, but you work them to death. How much money is enough to lose that family, work balance that we talk about, right? So, everything has its limits. And but I applaud you. I'm not trying to beat you guys up. You guys are tip of the spear. This is a new thing, and I think it's really great. But I would ask, as someone sitting on this committee, that you guys look out and take this data now and continue to build on it. As you guys plan to, but look at like what's going on around there, and then rob Peter to pay Paul, steal from him. Do like I did my 8th grade book reports, just change the sentence from the bottom of the paragraph to the top. Yeah. But yeah, that would be my ask. Thank you very much. So.
Thank you. Trustee Moore?
Just a general observation, just based on my own experiences. Administrative bureaucracies like ours that are relatively fixed in nature, driven by rules, regulations, procedures, processes, books of rules that you have to follow. And it's hierarchical. So, you got a pyramid and there's the 1 or 2 people at the top, and then it flows down. Developing or having the proper organizational culture for people to work within that environment has a lot to do with who you select in the first place. That is going to have a major impact on developing and maintaining your organizational culture, because you got to be able to deal with and work within an environment that is going to allow for some innovation and change, but over the long run, it's kind of static. We have 500 people, and that's all you're going to need for the next 80 years. And therefore, opportunities for advancement, promotions, self, and evolving yourself as an individual, those opportunities are less. And so when you start hiring and bringing people in, I think you got to make sure that you're bringing in people who can fit into the type of organizational structure that you're going to be working within. I think that's very important from the get-go. And once you get in, I noticed this, my observation was that there's a lot of distrust or uncertainty about the people at the top of the hierarchy. And one of the things I think that might address some of that would be having, and you probably have this already to some extent, the brown bag luncheons with the CEO a couple of times a year, where the CEO can take questions and share, big high-level policy decisions that may be coming down the pike or they're thinking about, so that everybody gets a sense that they know where the organization is going and they have it from the person at the top. So those are just my observations, because I certainly don't want to get into competing with Copilot and Chat GPT in analyzing what's going on and making recommendations.
Thank you so much.
Thank you. Larry?
Yeah, thanks. So just a couple of questions here and observations. First of all, we've had a lot of material presented to us today, but and they've come in each individual agenda item. But if you step back and take a look at all of these, there's like some common themes and threads that run through all of them. And I just highlight a couple of them. The compliance risk assessment brought out accountability as a high risk, oversight of critical business processes, the hiring process, budgeting and contracting process. Those were all high risk areas that came out in the compliance risk assessment, right? As well as business continuity and quality assurance, vendor management. In the audit plan, we had the hiring process, the contracting process, business continuity in there. The code of ethics that was brought forward, or the code of conduct, accountability was a huge aspect of that, and aligning our values with our actions. And then in the strategic plan that was presented, knowledge management, business intelligence, training and development, all of these themes that, from each one of these, we're getting kind of the same message and trying to address them. And so I noticed in here also that you have the next steps are developing kind of an action plan. You rolled this out, had some conversations about it. This was a collaborative effort between audit and human resources and the compliance group. And I understand from the audit perspective, why you want to understand the governance and culture of the organization that you're going to go in and audit, right? HR has a role in all of this and compliance as well. So tell me, when you put this, who's putting this plan together and who's going to be responsible for implementing it, and how is that going to be reported back to the committee, and that type of information? Because it's as I said, it's kind of thread throughout everything here.
If I may, through the chair, Chair Martin, appreciate the comments, Larry. First, I have ultimate responsibility over it, in terms of the culture of the organization and leading from the top, as was articulated. I first want to take a step back and really recognize the individuals that responded to the survey. I think 67% as a baseline. We're not, jumping for joy, but that sets us and gives us good data points to work from in terms of our building blocks for a better work culture. as Christina articulated, we will come back together. We just had our focus groups with team members from all levels of the organization. We started with the survey to get a baseline organizational input anonymously. Now we have the focus group results, which I think concluded this week. Now we're going to have a leadership team gathering to really talk through these themes that we've talked about and kind of we're calling it kind of a reflective look in the mirror approach on what we can do individually, but also collectively to make sure that we're formulating a plan that addresses all of the concerns that you heard before you. It's the second time we walked through the survey, I think one of the things we also want to be careful of, we want to be intentional in our approach, but we don't want to be overreactive in the responses. So I think we have to be deliberate. We're going to put together a plan that's representative of the feedback, but also has a component where we have continuous back and forth engagement, not only once a year or every 18 months. I think the cycle is we're looking at a year and a half to look at the next survey to kind of benchmark, but really making sure that we have constant communication to see how we're doing against this particular plan, which to me, it's going to be fluid. And so again, ultimately the responsibility is with me, the collective leadership team, but that's to answer your question, that's where we start, and then ultimate accountability will start with me.
Thank you, and I really appreciate those comments. Will that be coming back to this committee, or?
So the plan is all three governing bodies. So we have the BOR will have a presentation of this culture survey, as well as the BOI will have it on their agenda. And then when we build the plan coming out of the management offsite and there may be some additional engagement we have with team members throughout the organization outside of that management offsite. So once we put together the plan, it'll go back to the ACRE committee and also the other two governing bodies.
Good. Thank you very much. We look forward to that.
Okay, am I up? You want to go?
If you want to go, I could wait.
No, go.
Well, I just want to go with what Larry said just real quick. I mean, this is identified in the work plan for education, right? And Mr. Lugo's talking about that, and understanding your concern, but some of those common themes will be addressed by that work plan. So, say for example, and to Trustee Moore's point, we have laws, policy that we have to follow, and an employee might not understand that of like how long it takes or how an RFP works, or how long it takes to onboard a new county employee. And going back to the work plan, that's part of that education packet. So I do think that this is going to net and be so fruitful, because it's going to be able to center focus some of those things like that. I do feel confident in that, so.
I'm sorry, on my comments there too, is that it's multidimensional, right? I mean, we're approaching these issues from different, from compliance perspective, from an HR perspective, from an audit perspective. And I think it's important to point that out too, that look, it's not just, HR's issue, or, it's everybody's working together on this. And I think that's really important to point that out. So thank you.
I think the one commonality between all of it is it's human capital. That's what it is. It's just the human thing that is the Venn diagram that's in the very center of all the things that you just listed.
Okay, I'm going to wrap it up. All good stuff. All good stuff. I have a lot of experience at this cultural survey as an executive in the county. I think LACERA is just a microcosm of the county. You're all county employees. You're all under civil service. When I opened up the survey and I started to look at it, I actually was impressed. And I need to share that with you, because there are some great, the green lines are great. It's probably the best first survey I've ever looked at. So I want to encourage you to take it to the next level, and everybody has some great ideas. I just felt it was important to say what my original thought was, given my background. And really, I think the comparison might not be the other pension plans. It really might be, you know, your sister county departments. And I've seen surveys that we have to do so much more work than what you have. And again, some of the county departments are huge. I mean, I worked at DPSS, and talk about a culture for 14,000 people is crazy. But, you know, more at Reg Rec, we had 1,000 employees and did this over and over and over and made strides. But you are out of the gate way ahead of the rest of your county department sisters and brothers. So I just wanted to let you know that.
Thank you.
Okay.
Thank you.
Survey them all.
Exactly. All right, let's come back at 10 after for our closed session. No, she's correcting me. Oh, I still have something. You.
So I think there's two items. One is the, I don't know which order they're in, but one is the audits done not at the discretion of the ACRE committee or the internal audit. I'm not aware of any that have been brought to my attention. So we are pretty much aware of the work that's being done, and that's what's been reported to you today. The other was the staff activity report, and happy to report again that internal audit is fully staffed, but we are in the process of searching for my replacement. And we've worked, Larry Jensen and I have been working with HR. We have, and other members of the organization too, you know, up through the executive office to revise the job classification, and that has gone to the county for approval. We'll be meeting with the ad hoc committee of the, well, it's not just an ad hoc committee of the ACRE committee, I guess there's board members on the committee as well. So we'll be, that meeting is on December 5th. And we hope to have all of our ducks in alignment to begin the interview process probably right after the beginning of the new year, with the goal of bringing back a candidate for you know, approval of the audit committee or the ACRE committee in February, to be taken to the boards maybe in March for approval by the boards. All right.
See you at 10 after.
Thanks.
Whoever's coming back.
May I ask a question real quick? Sure.
Yes.
Okay, sorry, keep you here one moment. Might not be your question. It's on the memo page 2, follow up on recommendation. So you can put that up.
Sorry, what was it?
We're still on, guys.
Okay, page 2 of the memo, the follow up on recommendation. Recommendation follow up report.
Recommendation follow up?
Yes, page 2 of the memo. We don't have it? Yes, thank you. So I'm just connecting the dots here. In last BOI meeting, I point out, you know, I noticed the highest vacancy lies with system. And now I see the consistent, you know, thing that caught my eyes again is system again, with the highest number of recommendation not being addressed. So I was telling last meeting that we have temporary worker to fill those position, you know, to help out. I just want to say that, like, let's make sure, you know, every division is taken care of, is properly managed with the resource, that not become a risk to the organization. That's all I want to say.
Okay.
Thank you.
Got it.
Back to you, Chair.
Can I close now? Okay, 10 after. Thank you.
Thank you.